experts. None of us had been doing work on healthcare for the prior 3 months trying to get ready to walk in. We'd all been working on tax policy and trying to figure that out. So everyone got derailed for the better part of, I would say, 2 months or 3 months, knowing that we wanted to go through taxes in year one because we wanted to use that budget that existed, and we wanted to use budget reconciliation to get taxes done that year. So every day we were spending on healthcare, we were losing a day of tax policy, which was, you know, it was anxiety creating. Let's put it that way. So we were trying to get rid of the healthcare issue as quickly as we could.
What's going to be the priority when they walk in January this time around? Is it going to be tariffs, or is it going to be cutting taxes?
So I think there's two priorities day one. On the economic side, and you'll argue there's both economic. I think it's going to be taxes because, again, you've got a deadline. Remember, the personal side of the tax policy ends at 12 midnight, December 31st, 2025. So there is a forcing function. And Washington operates really well with a forcing function.
They need deadlines.
They need deadlines. They need deadlines.
They're like journalists.
Well, I don't know about journalists, but I know about Washington. they need a deadline. There is a hard and fast deadline. Now, look, they could extend it, but that would be another act of Congress to extend it. So they have a firm deadline in place. So number one thing on the, I would say, the economic policy front is they're going to deal with taxes. Number two is, I think simultaneously, we could argue this is economic as well. They need to deal with the immigration policy. You know, I think we will see Trump come back to many of the executive orders and many of the policies that he had going out on January 20th. He will reinstate all of those policies to shut the border and at least stop the flow of illegal immigrants in the United States. So I think they will work on both of those simultaneously. I do think there will be some tariff policy going in there as well. And I think the tariff policy that will be relatively easy for them to go on is to tariff things that we are currently manufacturing in the United States, where you would put tariffs in place to protect jobs and protect the products that we are currently making in the United States.
Okay, so personnel policy, we have 2 out of the 3. We have a border czar, he's announced, and we also have Howard Lutnick going over as to commerce. What is going on with the Treasury pick? We have 3 men who I've been told the president thinks are of high caliber: Scott Bessent, Mark Rowan, Kevin Warsh, in Palm Beach yesterday, having these conversations with the president. You know how he operates. Why is this pick taking so long if he ran an economic agenda campaign?
So I think you just answered a little bit. He ran an economic agenda campaign. This is in his opinion, this is one of the most important, if not the most important pick he is going to make. So getting it right is important. I'll also remind you something. We'll go back to 8 years ago. The economic picks were made the week after Thanksgiving. I was hired the week after Thanksgiving. Mnuchin was put into his job the week after Thanksgiving. So the transition team is a couple weeks and probably a month ahead on most of the picks. So, you know, we've all got this anxiety because, look, this is a second-term president, so he knows how to get stuff done quickly. But if you think of what happened 8 years ago, those picks were made in the last week of November, first week of December, and we were all ready to go in our chairs, in place by 12 noon, January 20th. So there's plenty of time to get it right. And I think the president knows, the president-elect knows, getting the right person is more important right now than getting the pick done today or tomorrow.
Do you think it's a name that I have not reported on?
Look, I'm not involved in the process. I think the president will put any and every name that he thinks can do the job well on the list, and he will choose what he thinks is the best person to do the job.
Do you think it's feasible for President-elect Donald Trump to achieve his goals of the tariffs that he's put out there while acquiescing or creating some calm in the bond market?
Look, we will see what actually happens in policy. You know, as I always remind people, what you say to get elected and what you do in actual policy are 2 different things. You know, Americans like to hear what your ultimate idea is to get done, but we've got a very rigorous policy process in the United States. We've got a House, we've got a Senate, we've got lots of constituencies, and when it comes down to actually executing and implementing policy, it is not exactly what the president wants. In fact, every piece of legislation is a compromise. There's no perfect piece of legislation in America because at some point people have to compromise. So we'll see what the president can get done. I think we're all confident there'll be something on taxes. We're 100% confident there'll be something on immigration, and there'll be something on tariffs. But again, each of these will be a compromise. No one is going to get 100% of what they want.
I guess the reason why people are so interested in the Treasury pick is because people want to understand what that compromise might look like, and the individual might give some insight into that. Do we have a sense, and will this sort of be the ultimate test for you, how much Congress pushes back on some of the picks that have already been announced that are controversial even among Republicans? Will that be sort of a test of just whether the checks and balances will work at the same time, when a lot of people are saying this time is different, and that this president-elect actually has something of a mandate that is very different than in 2016?
I think every Congress and every president, when they come in and they put their nominations through and they go through the consent process, it's different every 4 years. Every president goes through a different process. You have a different makeup of a Senate. You have a different sort of body. And by the way, the body will be different at the end of this year, and then it will transition. I think it's January 3rd is the swearing of the new Senate. It will change January 3rd in the middle of the process.
Right.
So some of these nominees could actually go through an approval process with this current sitting Senate. Some may go through with a new Senate. Probably the vast majority will go through with the new Senate, because it takes time to get the paperwork through, it takes time to get the vetting through. But every one of these events is unique, and it's uniquely different because there are different personalities involved. There's different people went through different elections.
Yeah.
Certain states changed, they became redder. So the senator may or may not be more comfortable taking a certain point of view. So you literally have to watch each of these as an individual, unique event.
So you did mention the financing of the deficit, and that's very interesting to me, especially at a time where you talked about the short-term nature of a lot of the financing. Do you expect that to change, for there to be a lot more longer-dated issuance regardless of where yields are at with the next Treasury Secretary, whoever that may be?
Look, I think it's really prudent risk management to start elongating the debt of the United States and not have to live off very large short-term auctions and not have to live off a short-term demand for treasuries. Like, we're always worried about financing the deficit and what could happen. Like, as a person that grew up as a risk manager running a large balance sheet for a large percentage of my life, you would want to de-risk that. How do you de-risk that from a treasury standpoint? You roll out maturities as long as you can, so you cut down the amount that you have to fund at each of these auctions. So I would think that this administration would want to get that done and roll out maturities.
Gary, we'll continue that conversation in just a moment. Gary Cohn will be sticking with us. If you are just joining us, welcome to the programme. The S&P up by a third of 1% this morning. With your stories elsewhere, your Bloomberg brief is Danny Berger. Hey, Danny.
Hey, John. The International Criminal Court has issued an arrest warrant for Israeli Prime Minister Benjamin Netanyahu and former Defense Minister Yoav Gallant. The ICC accuses the two of crimes against humanity and war crimes. The ICC unanimously rejected Israel's appeal. The warrant now means that the ICC's 124 member states would be obliged to arrest Netanyahu and Gallant if they were to enter their territory. Israeli President Isaac Herzog called the decision outrageous and a dark day for justice. The U.S. Consumer Financial Protection Bureau will now supervise Apple and other tech companies that offer digital wallets and payment apps. According to a statement from the CFPB, the agency will treat those companies like banks as long as they handle more than 50 million transactions a year. The final rule will take effect 30 days after it's officially published in the Federal Register. UConn women's basketball head coach Gino Auriemma made history last night with the Huskies' victory over Farley Dickinson University. Auriemma is now the all-time wins leader in college basketball history for both men and women with 1,217 victories. That surpasses the legendary Stanford coach Tara Vanderveer. For more than 60 former players came to the sellout home game to support their coach. And that's your brief, John.
Danny, thank you. More from Danny in about 30 minutes' time. Up next on the programme, the morning calls, plus a little bit later, Dana Peterson of the Conference Board on the latest US economic data. And in just a moment, more from Gary Cohn from New York City. This is Bloomberg.
East and Africa. Vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
The countdown is on. Everything you need to get the edge at the end of the market day.
Big tech earnings kick off later this afternoon.
Gilead is coming out right now.
We have take two numbers. Back to the markets, right? Our bread and butter.
NVIDIA is one of the best stories in the tech space.
That actually matters a whole lot more.
It might shock some of your viewers.
You're watching The Close.
Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Onim, only on Bloomberg.
We are 1 hour and 10 minutes away from the opening bell in New York City. Good morning to you all. Equity futures on the S&P 500 shaping up as follows, up by 1/3 of 1%. In the bond market, pretty soft 20-year auction yesterday, pushing yields higher. This morning, yields back down by almost a basis point, the 10-year 4.40. Time now for some morning calls with just one stock in focus, NVIDIA. First up, JP Morgan raising the chip maker's price target to 170, citing strong AI demand and Blackwell production ramping up. Your second call from Wells Fargo raising the company's price target to 185, recommending investors buy the weakness. That's what investors have been doing so far this morning. The stock is now higher by 0.5%. And your third and final call from Morgan Stanley raising NVIDIA's price target to 168, expecting a strong Blackwell ramp up through 2025. That's NVIDIA. Back with us, the former NEC director, Gary Cohn. Gary, I want to pick up on a conversation we were having earlier. The race to be the next Treasury Secretary. You've been in the room with President-elect Donald Trump many a time, including to interview. What's it like to interview with Donald Trump?
Well, look, it's always a stressful experience. You know, you're sitting there with the president-elect and a large amount of his team. Like, usually when you're in the room with the president-elect, going these interviews, there's multiple other people in the room. You know, I always reminded myself, I'm speaking to the president-elect, I'm not speaking to the other people in the room. So you've got to sort of block out the other people in the room. But he's rigorous in his questions, and he tends to go multiple different directions. So, you know, he'll go from topic A to topic B to topic C, back to topic A. It's interesting. You've got to be on your game. When you're in there, you've got to be on your game, and he's thinking, you know, in multiple directions. And it's very interesting. And he's always got a interesting spin on things. You know, I think the President-elect Trump is one of the best marketers and branders I've ever seen. So when I'm always talking about an answer and how I would think of something from a policy standpoint, he's talking about it. How is he going to sell this to America, and how is it going to affect people, and how is it good for the country? And he's thinking of it in that term. So we're always having an interesting conversation where I'm thinking about it from an economic policy, markets policy standpoint, and he's thinking about it from how do I sell this, and how do I get momentum for this?
Some space in the media are describing this process as looking for a yes man, someone who will just say yes to some of his policy proposals, including trade. You had disagreements with him on trade. You were very open about that. We were all aware of it at the time in the first term. How open is he to those disagreements?
Look, I believe it's the job of an advisor in the White House to tell the president the truth and tell him things that he doesn't want to hear. Now, you get to tell him plenty of things he does want to hear. You know, like it was always fun to go in there with the economic data. You know, you get the economic data the night before it's released. And there were many nights where I got to go in there and talk to him about the economic data, what it was, how good it was, how the markets were going to react. Those are great conversations. But along with those great conversations, you get to go in there and have conversations that say, hey, look, if we do X, I don't know, I think the reaction is going to be this. Are we prepared for this intended or unintended consequence? And I think those are the jobs of the people that sit in the White House as advisors, to make sure when the president does something, they understand the intended and unintended consequences. A president should never be blindsided by a decision.
When it comes to the check and the pushback on Trump 2.0, John talked about this his first 4 years all the time, the Trump put. It was the stock market that he cared about. He would reverse course on potentially something he wanted to do, an executive order, just because he saw the fallout in the financial markets. What's going to be that check this time?
I think Trump is going to care as much about the stock market these next 4 years as he did the first 4 years. That is a benchmark that he will measure himself. It's a very public benchmark. It's one that he uses. He talks about it in every speech. He's already started talking about it in the transition, how well the market's done since election night. I don't think that will change over the next 4 years.
Do you think the bond market takes on additional importance? We started this whole conversation about the difference between now versus, say, 2016-17. Certainly in fixed income in a very different position.
Look, I think the bond market deserves a long discussion here. I think there's a lot going on. When I talked a little bit ago, where Fed funds were at 76 basis points, where they're 4.5% now, that's only half the story. We had a flat yield curve, and then we've gone through an inverted yield curve over the last 4 years because everyone was worried about a recession, and now we're going back to something that we forgot what it is, called a normal yield curve.
How steep is a normal yield curve?
Yeah, like at least you've been around long enough to ask a question, how steep is a normal yield curve? Because a lot of people don't even remember a normal yield curve is steep. We've seen since the Fed started cutting interest rates, 10 years have gone up 60 to 70 basis points. I'm not surprised by that. I think we're renormalizing a yield curve. If we've taken recession fears off the table and the 10-year is going to go to a normalized rate of, let's call it 3.5%, there has to be at least 100 to 125 basis points of steepness in Fed funds 10 years. I think it's at least 125. If we're going to 3, that's at least 4.25. If we're going to 3.5, we're talking 4.75, and we're going to continue steepness out the curve. And that's before we get to what I consider a pretty large refinancing wall coming up in 25 and beyond. I think many people forgot that, 2020, the COVID year, we did a lot of refinancing in the market, but most of them were 5-year refinancing. So a lot of that COVID paper that was done at pretty favorable rates, because the Fed, again, went into very accommodative policy. Yep. A lot of that COVID paper comes due next year. So we've got a lot of refinancing coming due in 2025. So I think the yield curve smartly and normally starting to re-anticipate what's going to happen in the bond market.
We could talk all morning. Let's do it for now next time. It's good to see you, sir.
Great seeing you.
Appreciate it. Gary Cohn there, the IBM Vice Chairman and former Director of the National Economic Council under Donald Trump. Up next on the program, some breaking data for you. Jobless claims just around the corner. We'll get the reaction from Dana Peterson of the Conference Board, and we'll catch up with Christina Campmany of Invesco here around the table to react. From New York, this is Bloomberg.
It's the world's second largest economy with a growing influence in global affairs. But geopolitical uncertainties, deflationary pressures, and questions about foreign investment linger. Bloomberg, the China Show, brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China. Bloomberg, the China Show. Weekdays around the world, right here on Bloomberg. Context changes everything.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
This is Bloomberg Technology.
This is the Asia trade.
You're watching the close. Welcome to Balance of Power.
This is Bloomberg.
Asia is at the forefront of some of the world's biggest stories. I'm Sherrian in Tokyo.
And I'm Heidi Stroud-Watts here in Sydney, where the trading day begins. We're here in the center of all the action to get you set up with the numbers, news, and knowledge you need for the day ahead.
The demand is indeed recovering. We've been waiting for this moment.
The opportunity of a century.
Join us on Bloomberg The Asia Trade. Weekdays only on Bloomberg TV. Context changes everything.
Equity futures on the S&P up by 0.4%. On the Nasdaq 100 up by a third. The small caps doing nicely, up by 0.7. Next up for this market, jobless claims in just a moment. The estimate is 220. The previous number is 217. Going into that in the bond market, your scores look like this. The 10-year just about unchanged, around 440. The 2-year just about unchanged, also at 431. At the long end of the curve, the 30-year 460.23. With your economic data, is Mike McKee. Good morning, Mike.
Good morning, John, and the trend continues. 213,000 is the jobless claims number, and that is down from the prior week. Obviously, we saw a revised 219 for last week. Philadelphia Fed Business Outlook Index drops to negative 5.5 from 10.3. The new orders index is at 8.9 from 14.2. Employment, 8.6. That's up from 2.2. And I point that out because there's an interesting aspect to the jobless claims numbers this time, and that is that in September we had a 219, and then we had a very big payrolls report. In October, we had 246, and obviously that was hurricanes related, but we had that very low jobs report in October. So 213 would give you a suggestion that things might be better. And you look at this Philadelphia Fed number, and it is a big drop in the headline calculation for how people are feeling, but the employment number goes up. So if you're trying to put together your forecast for December 6th, these are some of the inputs that you might put into it. And I'm talking about jobless claims because last week was the reference week for the jobs number survey.
213 is just phenomenal. And Mike McKee, thank you, sir. The equity markets as session highs are up by 0.5%, let's call it. In the bond market, yields stay pretty much unchanged to down a basis point or so on a 10-year 440, on a 2-year 431. But just to frame that 213 is ridiculously low for jobless claims in America.
To put this into perspective, it's actually the lowest number going back to April, which is sort of in coherence with a lot of metrics. We're seeing now the fewest number of rate cuts being priced into December rate meeting. Going back to April, you see the most positive surprises economically in the U.S. since April. It seems like that upward trajectory is taking hold, which is the reason why I find it interesting that the bond market isn't moving more on this. Is that what's already being baked in?
I was trying to dig out the Chairman Powell speech from Jackson Hole, Wyoming, all those months ago in August, and I can't get to the body of the speech quickly enough, but ultimately I wanted to go back to that because in August, at the end of August, there was this real worry that the labor market was starting to weaken, that they wanted to get ahead of that weakness, that they did not welcome any weakness. And this whole conversation around this table shifted and really quite quickly. It was going to be the beginning of a rate cutting cycle. Would it be 25? Would it be 50? Would it be a string of 50 basis point reductions? Here we are, 75 basis points of reductions later. We're talking about the end of a rate cutting cycle potentially, maybe even a pause in December. There are still some people wondering whether September was actually a mistake. Aditya Bharve of Bank of America came on the program earlier this morning and said it was. The labor market weakness we saw in the summer was a head fake. That's the view of a lot of people on Wall Street, and the response that we saw from the Federal Reserve was a mistake.
And that's why the tone is changing yet again, at least on the margins. Maybe not Fed Chair Jay Powell himself, but Fed Governor Mickey Bowman coming out yesterday saying she would prefer to proceed cautiously. Boston Fed's Collins saying that while some additional policy easing is needed, they need to be able to go deliberately before they move again. So there's a real question here about whether maybe they've run out of room to cut so easily, and the future is going to be a lot more difficult.
I found that line. We do not seek or welcome further cooling in labour market conditions, and we didn't have much of that, let's be clear about it, over the last few months, with the exception, of course, that hurricane-disrupted number that we had in the previous month. Joining us now to discuss is Dana Peterson of the Conference Board. Dana Peterson, 213 on jobless claims. How strong is that number?
Has a really strong number. It means very few people being let go. And I think what's important also is to look at continuing jobless claims. That's a number of people who actually receive benefits and are staying on there, but they're coming off. And indeed, we're not seeing very high continuing claims either. So I think it continues to suggest that the labor market is doing okay.
Are things lining up for a pause for the Federal Reserve in December, or is it still too early to tell?
I think it's a little early to tell. We still really need to see that October PCE inflation data. The CPI continued to show some stickiness, not only in the headline, but especially in the core, even away from shelter. And so I'm sure the Fed will want to see if that also played out in their favorite inflation gauge, which is a PCE deflator. But it also depends on how strongly we see employment bounce back. When we look at retail sales, they were slower, but we had a feeling that they would be in October given the hurricane effects. But even still, consumers went out and spent. So I think that they can probably still go ahead and cut by 25 basis points in December, but next year is rather uncertain.
Especially when we're not clear on some of the inflationary impulses and changes in policy. Tom Barkin of the Richmond Fed, in an interview in the Financial Times, said this, and I thought this was interesting: we're somewhat more vulnerable to cost shocks on the inflation side, whether they be wage-related or otherwise, than we might have been 5 years ago. Dana, this really goes to the heart of the feeling about a neutral rate that is significantly higher in the post-pandemic era, even once we have normalized. Do we have a sense, do you see evidence that maybe we've reached a plateauing in the disinflation? And then when it comes to the wage front as well, that could once again be one of the pressures.
Well, we've been saying for several years now that inflation's probably going to be tougher to beat post-pandemic than before. And certainly you have many more upward inflation pressures. Some of it's structural from demographics, which is also influencing wages. But yes, we continue to have these shocks like onshoring, deglobalization. We could have more tariffs. All those things are highly inflationary and will resist the Fed's efforts to get inflation back to 2% and keep it there. And in order to keep it at 2%, we imagine that the federal funds rate is just going to have to be higher, maybe above 3% going forward in nominal terms.
To throw policy into this, we were just talking with a number of different people who are close to people in the Trump orbit. Gary Cohn was talking about how immigration would be one of the first potential issues to tackle. And I'm just wondering how you factor that into your outlook for the U.S. economy, given that that was one of the reasons why you could see full employment and disinflation at the same time.
Sure. I mean, we don't know exactly what's going to happen. All we have are promises made on the campaign trail and what's being said, over the airwaves. But I think that all economists should think about, what could be some of the scenarios. We might have renewed tariffs. Those tariffs could be broad. If we do see large amounts of people being deported, or even the announcement effect, you could start seeing people leave their jobs, and that would cause shortages in some of our key industries. We don't know exactly what's going to happen, but it's certainly something that we should look at in our risk scenarios, and potentially some of those things might become the base case.
Dana, put all of that in a dot plot. How difficult is that going to be in December?
Well, I think it's going to be very difficult because all the FOMC participants are just like the rest of us. They're hearing the same things. They know about all the different risks that there could be to the economy. There could be spending cuts in order to work out a deal for the debt ceiling, or even to pay for extended tax cuts. All those things factor into the outlook. So it's really, what do you think is most likely? And then you have to go with that in terms of your dot plot. And so I think we could see a pretty wild dot plot with numbers all over the place, given the uncertainty.
Dana, given that you focus on consumer confidence and just business confidence, how much are you actually seeing a real shift upward in terms of confidence post-election to make investments, to do certain structural changes that could increase growth versus the same constraints that were there before, which is high rates and still a lack of clarity?
Sure, we don't have any hard data. Our consumer confidence measure comes out next week. That may capture some election elements. And certainly for CEOs and executives, we do speak with them. And we're hearing a mix of things. Some are excited that there could be more deregulation, which would potentially help cut red tape for them. Certainly now that the uncertainty around the election is over, we know who won and what the composition of Congress looks like. They may start investing again. But others are concerned about if industrial policies that were passed that were helpful for reshoring and building factories and building out infrastructure are still going to be there. And again, the big word in the room is tariffs. Are we going to see higher costs for imports that most likely companies are going to pass on to the consumer? And so very mixed feelings right now. And I think it really depends upon what industry you're in and what your expectations are for next year.
Dana, looking forward to your data when it gets released. Thanks for being with us. Dana Peterson there, the Conference Board. Following jobless claims dropping just moments ago and literally dropping to 213. Much lower than we anticipated and lower than the previous week as well. That is the right kind of downside surprise on jobless claims in America. I'm looking forward to consumer sentiment by political party, because there is, and we've seen evidence of this repeatedly, that overnight Republicans will feel much better about the U.S. economy and overnight Democrats will feel much worse.
It's a wonderful sort of reality check of what we're talking about when we talk about consumer confidence and how fickle it can be. But I do love that. We're going to just basically see, it's going to just completely diverge.
It's why Paul Donovan of UBS, every time he gets surveys, he was like, ignore them. They're actually just political polling. Look at the real data. Look at things like retail sales if you actually want to see what he calls the hedonism of the U.S. consumer.
Are people going out and spending or not? And based on retail sales so far, retail sales have been pretty decent. Revisions were really strong. You go through the retail earnings we've had so far, remove Target out from that, Walmart, TJ Maxx, things are looking pretty decent.
And that's because of the economic data that preceded the election. And I think that's what everyone keeps coming back to. And that is what Aditya Bahave was saying, that essentially they have revised their outlook for the Federal Reserve, not just because of the election, on the margins maybe because of potential policies, but because of the trajectory of an economy that has shown and proven itself to have much more heat in it than people expected.
A series of upside surprises. Where did you say the surprise index was now, the highest since?
Well, it's kind of teetering around the highest level since April. I don't want to say it's at the highest because it's
since
not.
Spring.
Yes, thanks.
Around those levels.
That's good.
Pretty decent. Joining us now, Christina Campmany of Invesco. Christina, good morning. It's good to see you.
Thanks so much for having me in.
Are we still on a one-way road back to 4% on Fed funds, or are we facing a bit of a pause here, some disruption?
I think that there's very much the case to go in December, and then the Fed has 100 basis points of easing under their belt. And I think it is prudent to pause. And we've been talking about, do we get 100, do we get 150 basis points, and then you pause? But we have clarity that we have a red sweep, but we don't have a lot more clarity than that, right? Like, what are the policy priorities? What is the magnitude? What is the order they're put into? We expect you can get one or two things done right away, and then you have some bogged down potentially in the legislative process. But how do we prioritize them? What's the speed? What's the magnitude? And then what is the reaction function in the economy? Because as you said, the market had this dialogue in September that it was the Trump trade and that's what we were pricing. But was it that, or were we pricing the underlying resilience of the U.S. economy and the strength of the data?
A little bit of both, apparently.
Yeah.
I'm not sure how much of one versus the other, but certainly a little bit of both. Gary Cohn was with us a little bit earlier, and we talked about how accommodating or not financial markets would be of some of these policy decisions. Can we just sit on fixed income? Credit spreads are really tight. Bond yields are already quite high, based on what we've seen over the last 10 years at least, relatively speaking. How accommodating do you think fixed income will be to any administration that wants to come in and start spending more money?
Look, so when we look at rates, and both the front end and the long end have done a lot of work to reprice higher, right? Like, you've had 75 basis points of easing, and across the board, we're higher in yield levels. I think if we get this 25 basis point ease in the front end, policy is basically flat to 2 years, and I think that leaves front end securities offering a lot of value and out the credit spectrum as well, whether that's securitized products or corporates. And spread levels are tight, but I still think that there's money that's happy to park and pick up yields there at 6-7% in that spread. Out the curve, there was definitely support for the market at 4%, and I don't think people expected us to even get up and push these 450 levels. And that's kind of what we've been looking for since September, that there needed to be more steepness in the curve. And if anything, I think we've been surprised that we haven't been able to steepen. But I think the risks are still out the curve. And what are the inflationary impacts of all of these policies, of tariff, of deportations, changing the labor force dynamics, right? Like the economy, the objective has been to hold this soft landing, and now we're gonna have melding, so let's see what we get from it.
Gary Cohn made a really interesting point, that this administration would likely try to term out some of the U.S. debt, that the previous administration, the current administration, has been selling a lot of short-term debt, and that probably the next one will look more toward longer-dated bonds. He sees the bond market starting to sniff that out. How much of that has been priced in? What would that do to the long end of the yield curve?
Look, I think having sat in the U.S. rates market for a long time, it's something that we always talk about of like, why are we not terming out the debt? And certainly with the curve still inverted, it feels very like that there is an opportunity there to term out the debt and lock in rates. Obviously, rates are higher than they were 5 years ago and post-GFC, but still to term out the debt. I don't know that the market's sniffing it out because the curve is still inverted. We haven't really had that buy-in. Same thing, throughout the last number of years post-COVID, you've had realized inflation, and the market's expectation read of inflation with break-evens has been incredibly contained because the market has credibility with the Fed.
I guess that then it leads to the question of what does an orderly steepening look like at a time that preserves your long call and a number of credit and securitized instruments while still allowing the U.S. government to term out quite a bit of debt? I mean, how much could you see a steepening without really a massive market disruption?
Yeah, look, so I think the consensus for steepening in the market is different now than it was 6 months ago when the market as a whole was looking for the Fed to cut policy through neutral, and it was much more of a front-end move. Can we still see some gradual leak higher? Yes. People talk about a Liz Truss moment. That's not our expectation. I think you still have a story of U.S. exceptionalism, and that is where money is happy to come to the U.S. and be parked here. So we don't believe in the case for a disorderly steepening of the market.
Christine, in your notes, you talk about the markets are digesting some of the appointments and the names we're hearing out of Mar-a-Lago, particularly looking for clarity on Treasury Secretary. I myself am as well. My question is, if this drags on, is that in itself a market's negative event?
I'm not sure if it is yet, right? Inauguration is the middle of January. We still have some time. We've gotten, if anything, it felt like the first 2 weeks coming out of the election results, it was rapid fire of names of who's coming out. And I think the market is digesting what is, again, who is in offices and how do they handle Trump and kind of are the mediator between the markets and what Trump would like to accomplish, I think is part of it. But I don't think the pace is an issue at this point. I think we just all are looking for clarity because there's so much uncertainty. What are the policies? What is the magnitude? What's the order? What are we prioritizing?
Do you think it's any of the personnel that could be checks on potentially some policies the president might want to enact next year? Or do you think it is going to be the markets? We were talking about with Gary Cohn, and Jonathan has talked to us tons of times. It was the stock market, Trump 1.0. Is it the bond market in 2.0?
I think from what we know from Trump 1.0, I think he cares about what the levels on the screens are, and he will be cognizant of that. And I think market perception of unfriendly policy will be reacted to.
I saw the Bloomberg Terminal in the West Wing in Trump Volume 1. I was there. I've witnessed it. Christina, it's good to see you.
Thanks so much.
Thank you so much. Christina Campmany of Invesco. I was getting them to type in SPX and get away from Dow Jones on the screen, but you know, I failed based on how many tweets we've seen.
You have another 4 years.
I can try again.
Two.
Making the S&P 500 great. Not again, just great. Okay, let's get you an update on stories elsewhere this morning. With your Bloomberg brief, here's Danny Berger. Hey, Danny.
Hey, John. House Ethics Committee Republicans voted Wednesday against releasing the results of the panel's sexual misconduct probe of Matt Gaetz. The Ethics Committee has faced more pressure to publicize its findings after President-elect Donald Trump nominated Gaetz for Attorney General. House Democrats still plan to force the issue, but need at least a few Republicans to back them. Gaetz has long denied the mounting allegations against him. The brand new Department of Government Efficiency Task Force has its first proposal. In a Wall Street Journal op-ed, Elon Musk and Vivek Ramaswamy said that they plan to require federal employees to come into the office 5 days a week, resulting in a wave of voluntary terminations that, quote, we welcome. The two also derided civil servants who make decisions yet aren't elected, calling it anti-democratic and antithetical to the founders' visions. Bitcoin is nearing $100,000, now just under 98,000. Optimism on President-elect Trump's crypto support and MicroStrategy's plans to accelerate purchases of crypto fueled gains. People familiar also said that Trump's transition team is holding discussions over a White House role. The market has gained $900 billion since Trump's election win. And that's your brief. John.
Danny, thank you. A lot of people lining up to buy the dip in NVIDIA this morning. That stock is higher by 1.65% now in early trading. In the immediate aftermath of earnings yesterday, when that forecast dropped just below some of the biggest expectations out there, this stock dropped too by 4 to 5 percentage points, fully recovering and some so far this morning, helping to push equity futures towards session highs up by 0.4%. And the data out from America so far still pretty decent. Jobless claims exceptionally low, the right kind of downside surprise. Up next, we'll set you up for the day ahead. We'll catch up with Manus Cranny and get you some movers going into the opening bell, which is about 41 minutes away. From New York, this is Bloomberg.
I think one of the dirty little secrets of credit is that the businesses generally don't pay you back, right? The markets pay you back, M&A pays you back. So what is the most important thing is to always make sure that the borrower is worth more than the loan. And as long as the borrower is worth more than the loan, then it might be a rocky ride, but you're gonna get your money back. And this world where there's these disruptive companies that have, let's call it 100, 200, 300 million of ARR, are looking to not raise equity capital because of the fact that they raised it in 2021 or 2022, and no one really wants a down round. But there's a lot of capacity in the capital structure to have, let's call it a structured solution. We think that there's a lot of opportunity with those businesses.
It's the countdown to the market open as we bring you the first trades across Europe.
We'll debate the most important stories and what will drive the big investment decisions throughout the morning. I'm Guy Johnson.
I'm Kriti Gupta.
And I'm Anna Edwards. Join us every weekday morning for the opening trade, live at 7 a.m. here in London.
Only on Bloomberg. Context changes everything.
Always on the heartbeat of the tech sector.
Spread across global markets.
The real-time data aspect is going to be important.
We're going to bring you expert analysis on that. Sure.
Don't miss Bloomberg's interview with the
It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. Bloomberg ETF IQ, only on Bloomberg.
If you are just joining us, welcome to the program. For those of you getting ready for the trading day ahead, we're about 37 minutes away from the opening bell with equity futures right now positive by 0.4%. The Nasdaq up by 0.5%. The Russell, the small caps, up by almost 0.8%. Your trading diary and the calendar for the week ahead looks like this. Today, some Fed speak from Hammack, Goolsbee, Schmidt and Barr. On Friday, S&P Global PMIs and UMich consumer sentiment. On Tuesday, looking ahead to next week, consumer confidence, new home sales, and Fed minutes on Wednesday. Durable goods, a second GDP read, and another round of jobless claims because markets are closed for Thanksgiving on Thursday, and we all can't wait. Seriously, that just needs to happen really quickly.
Like now.
Let's get to the holidays, like tomorrow. Before we get there, with about 37 minutes away from the opening bell, here's Manus Cranny with some morning movers. Morning, Manus.
Jonathan, NVIDIA, what else do we talk about? You had the first flesh wound yesterday, which was the knee-jerk sell. We've traveled all the way back from being down 5%. Leave it to Dan Ives at Wedbush. They're producing the Blackwell chip. It is the LeBron James of chips. The point about it is you've gone from a sell first, ask questions later, down 5%. Yes, you turn it around. The margins will be at 75% next year. Roll it over, have a look at MicroStrategy. You've been touching on Bitcoin through the morning. It's inextricably linked to this. They're actually going to sell more convertible notes to what I told you yesterday. $2.6 billion of convertible bonds are going to be sold to do what? Buy more Bitcoin. I leave you with a quick snapshot of Snowflake. How do you collate all your data in one place? Do it efficiently. One-stop shop. You do it now at Snowflake. They're making $906 to $911 million on the guidance. And of course, they've got the magic word in there. They've got Anthropic, the LLM, large language model, to help you clean the data efficiently. Jonathan, good morning.
Manus, good morning. Once again to you. We appreciate it. Thank you, sir. With your morning movers going into the opening bell, just enough time for a final word around the table. Bremo.
Well, I just want to emphasize what Gary Cohn said. We don't spend enough time on the bond market, and that ultimately...
Spend some more time, by all means.
We should spend some more time on it because I think that really is going to be the focus, which is the reason why we care about the Treasury pick.
Well, Gary Cohn made me a little bit nervous when he was talking about, remember this time in the first iteration of Trump, it was after Thanksgiving when he got the nod to leave the lead the NEC, and then Mnuchin's announcement came out. And I'm just thinking, can we actually do this for another week? Can this drag on?
We is doing a lot of heavy lifting.
We meaning you.
Yeah, me and the team down in Washington and the others in Mar-a-Lago, can we actually do this as Trump looks for his, quote, perfect candidate?
I think Gary's point is a point we've made around this table before, that the election was only 2 weeks ago, and this transition team is already operating well ahead of schedule.
Yeah, and I think that people are impatient because they want to understand the tales. And I think Jason Draho's points of UBS today was really telling. That basically the base case has not changed post-election. The tail risks have. And that's the reason why people want to understand the policy, both in terms of what it will be, what the sequencing will be, and what the personalities and massaging will be around said policies.
On the personality, I'm looking forward to a Thursday night special in Mar-a-Lago a little bit later on this evening.
You're trying to help her out? Trying to expedite it?
Anne-Marie's in charge of that. Look out for reporting from Anne-Marie and the team down in Washington, D.C. on the race to be America's next Treasury Secretary under President-elect Donald Trump. Coming up tomorrow, your lineup looks like this. Mohammed Al-Aaron of Queen's College, Cambridge will speak to the ECB Governing Council member Mario Centino. That will be very cool. We'll catch up with Raj Agrawal of KKR and Tiffany Wilding of PIMCO. From New York, thank you for choosing Bloomberg TV. Good luck for the rest of the trading day. This was Bloomberg Surveillance.
Jumpstart your trading day on Bloomberg Open Interest.
2 hours of single stock stories that are driving the opening bell action. We'll take you to Wall Street, Main Street, the C-suite, and beyond.
These are companies that are growing their market.
The great companies in the U.S. are the companies hitting the cutting edge. That's a different story.
Get the inside track on what's buzzing in markets.
With the players who are shaping the narrative.
If you have bad earnings reports, you're going to get punished.
They're not buying what the industry is selling. Join us on Bloomberg Open Interest. Every trading day, only on Bloomberg.
Minutes ago, we asked the live audience on X to submit a few requests for what they would like us to try out here. So I will take a couple of prompts. Okay, Bot Gaskar wants to know if GPT-4o is capable of real-time translation. Mark, you want to try this one?
Sure, yeah, let's do it.
All right.
Yeah.
I speak Italian, so we can just do English, Italian.
Let's try to do English-Italian. Sure, let's do it. Hey, ChatGPT, how are you?
I'm doing fantastic. Thanks for asking. How about you? How's your day going?
I'm doing great. So I would like you to function as a translator. I have a friend here who only speaks Italian, and I only speak English, And every time you hear English, I want you to translate it to Italian. And if you hear Italian, I want you to translate it back to English. Is that good?
Perfetto.
Mark, io mi chiedo se le balene potessero parlare, cosa ci direbbero?
Mike, she wonders if whales could talk, what would they tell us?
They might ask, how do we solve linear equations?
Potrebbero chiederci come risolviamo le equazioni lineari.
Sicuramente sì.
Certainly yes.
Great, looks like it works.
All right. So the next one is from Burrito John 78, who asks, can you tell what you're feeling just by looking at your face? Barrett, you want to give this one a try?
Absolutely, let's try it out. Hey, ChatGPT.
Hey there, what's up? How can I brighten your day today?
Okay, yeah, so I'm gonna show you a selfie of what I look like, and then I'd like you to try to see what emotions I'm feeling based on how I'm looking.
Sounds like a fun challenge. Go ahead and show me that selfie, and I'll put my emotional detective hat on.
Okay, so here's me. So what kind of emotions do you think I'm feeling?
It seems like I'm looking at a picture of a wooden surface.
Oh, you know what? That was the thing I sent you before. Don't worry, I'm not actually a table. Okay, so take another look.
That makes more sense. There we go. It looks like you're feeling pretty happy and cheerful, with a big smile and maybe even a touch of excitement. Whatever's going on, it seems like you're in a great mood. Care to share the source of those good vibes?
Yeah, no, the reason I'm in a really good mood is because we were doing a presentation showcasing how useful and amazing you are.
Oh, stop it. You're making me blush.
Amazing. Well, that's it for today on live demos. As you can see, this just feels so magical, and that's wonderful. But we also want to remove some of the mysticism from the technology and bring it to you so you can try it for yourself. So over the next few weeks, we'll be rolling out these capabilities to everyone. Today has been very much focused on the free users and the new modalities and new products, but we also care a lot about the next frontier. So soon, we'll be updating you on our progress towards the next big thing. And before we wrap up, I just want to thank the incredible OpenAI team, and also thanks to Jensen and the NVIDIA team for bringing us the most advanced GPUs to make this demo possible today. And thank you all very, very much for being a part of this today.
I will show you how to get the best funding for your startup idea. Let's get started. Here's the deal. If you have an amazing startup idea and need funds to fuel it, we're here to help. Simply send us a video where you explain your idea. Make it clear, concise, and compelling. Hook us in with your passion and vision. Don't forget to include your contact details so investors can reach out directly. This is your chance to shine and get your idea in front of people who can make it a reality. Imagine turning your startup dream into a thriving business. It all starts with that one simple step. So what are you waiting for? Grab your phone, hit record, and let your idea fly. The future of your startup could be just one video away. Remember, be clear, be passionate, and most importantly, be you. We can't wait to see what you've got. Let's get funded now.
0.7%. It's interesting because Deere lowered its profit outlook for 2025. It sees more weakness in the industrial spaces, and farmers are hesitating to buy new machinery. That gets more complicated, of course, when you think about tariffs. We'll talk more about that later. Snowflake surging on demand for its newest software. It plans to buy AI data aggregator Datavolo. You have Snowflake up almost 25% pre-market. And finally, as we've been talking about, NVIDIA beating estimates for the most recent quarter, but its forecast did not impress investors last night. You still, however, as we've been talking about, are seeing NVIDIA shares up 1.8% pre-market, Matt, and you are near that record high.
Yeah, I'm surprised, frankly, that we're seeing NVIDIA shares climb. I was patiently waiting at my Bloomberg terminal yesterday at 4:20, saw each headline come across the terminal and said, yeah, that's not really impressive. Okay, that's not a surprise. Okay, that was in line with expectations.
Well, it was your own expectations.
Just not blowing away, well, me and the market, right?
Yeah. Well, think about what we heard from Jensen Huang. He said that the Blackwell products will ship this quarter, actually. He said there's very strong demand. Of course, you wouldn't expect him to say anything less
Things
than that.
Things are going okay.
But even still, I mean, they are having to spend more to get them out the door. But even still, I mean, we know that everyone has told us that NVIDIA has such a lead on the rest of the field here. There is so much demand for these chips. I mean, okay, maybe it didn't meet the very top of the expectations.
They're supposed to beat and raise, beat and raise, beat and raise.
I mean, it could be a strategy too, you know, under promise, over deliver next time.
Yeah, and it does absolutely tell you here that everyone went into yesterday saying, you know, we're near record highs for NVIDIA. This is as good as it's going to get. If they miss at all anywhere, it's going to be a big problem. Obviously, it wasn't, which bodes very well for investor expectations heading into next year.
Yeah, I shouldn't complain, I guess, about that growth. For more on NVIDIA, we're joined by CJ Muse, Cantor Fitzgerald, semiconductor equity research analyst. He has an overweight rating on the stock with a $175 price target. CJ, I mean, is Katie right? Have they changed their beat and raise strategy? Are they now under-promising to over-deliver next quarter?
Yeah, good morning, Matt. Thanks for having me. I don't think it's a change in strategy, but I do think that it's reasonable for a modest reset to, you know, growth expectations to then start more meaningfully beat and raise into January and April as Blackwell truly ramps. So, you know, I do think that you are going to see a reacceleration in their data center business starting in the April quarter, and I think that's a key catalyst ahead for them.
So not a change in strategy, perhaps a reset here, and maybe the market had gotten a little greedy after that 200% gain. But let's talk about Blackwell, of course, supposed to start shipping this quarter. One of the concerns heading into this number was that maybe customers were holding off on their Hopper purchases to hold out for Blackwell. Are you seeing any evidence of that?
No, I don't think so. I think what you're seeing is that everyone is taking whatever they can get. And so the challenge, quite frankly, is limited CoWoS packaging supply as well as HBM. So on the call last night, they talked about how Hopper was probably tracking flattish into January, and that's really NVIDIA deciding where to appropriate, you know, the limited HBM memory capacity that they can find. So, you know, I don't think that's the case at all. The good news is that, you know, you're seeing Hynix and Micron ramp capacity. You're seeing TSMC ramp CoWoS, and so I think that you're going to see a very, very strong ramp for Blackwell throughout 2025. And, you know, the bull case is $220 billion plus in data center revenues, and I think that's absolutely achievable.
When you think about the price target that you have on NVIDIA, it's funny, I would walk in today normally asking about the downside risk, particularly because of what Matt was saying earlier, this idea that they did not meet the highest of expectations. What is the upside risk, actually? Because you kept your price target at 175. What do you need to see from them to raise your price target?
Sure. So, you know, I think the chart that you put up earlier highlighting Tesla PE versus everything else, you know, really highlights how NVIDIA's strength in terms of the stock performance has really just been in line with the strength in the fundamentals. And so if you assume kind of a 30 multiple for, you know, the most important AI company on earth showing the greatest growth, not crazy, right? And I think that the bull case for the buy side is $6.25. You're probably talking $8.26. And so, you know, thinking about a $250 kind of price target over time is not unreasonable.
All right, I got to say about that chart, I know we keep flying it, and I love all the colors on it, but I think we should take Tesla out of it. It makes NVIDIA and everything else look cheap, but we're still talking about, of course, valuations in the mid-30s. The S&P 500 is at the mid-20s.
Okay, but for NVIDIA, that's nothing, right? I mean, they have been trading at 70, so double that. So it's only half of their highest valuations. They're only trading at 20 times sales.
Are you telling me to zoom out here?
I don't think people are greedy in terms of valuations on NVIDIA. Just because the price has run up, you have to look at what revenue and sales have done, right? They do more in sales than Intel does in yearly revenue.
CJ is talking about almost 70% upside in the stock over time too. So, what kind of PE does that imply?
Well, if they continue to double revenue and grow sales at like 70% margins, it's not a huge PE. Yeah, remember, the stock price has to be viewed in terms of the earnings power of the company. My thought, CJ, is on the downside risk that who needs to train these things outside of the hyperscalers? I mean, if I'm going to implement AI in my business, as long as I'm not AWS or Azure, I only need to inference. So why am I paying for these terribly expensive processors and reinforcing my floor and bringing in a plumber to do liquid cooling? Like, why don't I just go with Samba Nova or Cerebras?
Yeah, sure. No, it's a great question. I think, first and foremost, you never stop training your models, right? And so when Jensen delivers a new product every 12 months, you're going to want to benefit from that, increased compute power. And so, you're now talking Blackwell, and then you've got, Rudin coming next year, and you'll have something the year after. And so I think what you're going to see is, buying new GPUs to train, pre-train, post-train, and then you're going to repurpose, your old GPUs for inference. And then on the inference side, we're seeing, real-time increase for scaling there. And ChatGPT Strawberry announcement was critical in highlighting how if you spend more time inference, the greater, the capability of the output. And so I don't think, things are slowing. And very importantly, last night, Jensen, to the question of whether large language models are stalling out, he emphatically said no, and that we're, still very early. And on top of that, highlighted the need to update, $1 trillion worth of data center to support the AI needs. And so if you believe in those two things, then, you've got a path, very importantly, for growth in 2026. And that is the key question for investors. And if you can get that growth in 2026, then NVIDIA is moving up and to the right.
CJ, just quickly here, even the NVIDIA bears tell me that you think about the competitive moat that this company has, and it's hard to argue with that. But that being said, you think about all these companies that are trying to whittle away at that lead, AMD in particular, racing to catch up with NVIDIA here. You think about what's going on with the competition, you overlay it with the valuation, which may be justified by the fundamentals. How long can NVIDIA keep the lead here?
Well, they've got the first mover advantage. They built the software stack CUDA starting in 2005. And AMD, is in the market just in the last couple of years. You talked earlier about Samba Nova and Cerebras, and obviously those are smaller players that are trying to, enter the fold. And you also have custom silicon, at the big hyperscalers. So I think you really have to parse through the end markets. Internal workloads are going to be balanced between GPUs and custom silicon. And then I think the enterprise is absolutely going to go with NVIDIA because of their software stack and their needs for flexibility. So I think that there is definitely a place for everyone that you mentioned to have a role. But I see, no change statement in NVIDIA's leadership in this market, in the coming 5+ years.
All right, CJ, great to get some time with you. That is CJ Muse of Cantor Fitzgerald. NVIDIA shares up 2% pre-market, adding to this year's rally of 194%. But it's not all about NVIDIA. Let's take a look at some of these other stocks moving ahead of the opening bell with Abigail Doolittle.
Indeed, and sticking with the AI theme, take a look at the shares of Supermicro Computer, up nearly 7% or 6% at this point after yesterday. There was an update. They've received a NASDAQ non-compliance notification. This does not have any effect on stock trading. NASDAQ cited timely filing requirements, and Supermicro Computer has submitted their plan addressing the delay. Investors, at least right now, taking this as a bit of a relief, and there is, of course, a nearly 20% bearish short interest on this, so this could be another reason for some of those super bears to get out. Turning to the shares of BJ's Wholesale Club Holdings, we are going to see a nice gain here as well, up 3.6%. They beat on earnings by about 26%. They also boosted the full year outlook. They've hiked the membership fee. Digital is strong, so all things are well with BJ's Wholesale Club, it seems. So this bifurcated consumer, the haves and the have-nots among some of these big box stores continues. And then finally, rounding it out with the crypto space, Merrill Holdings Holdings, which is crypto related to clean energy, up 11%. And of course, yesterday we did receive the word that President-elect Trump is considering some sort of a crypto board, crypto department headed by someone who could be named. On this, we have Bitcoin approaching 100K, so this crypto space is soaring higher, Sonali.
Abby, thank you so very much for taking a look under the hood. That is Bloomberg's Abigail Doolittle. And coming up, President-elect Donald Trump still needs a Treasury Secretary. Days and days of searching. We're going to bring you the latest on that search next. This is Bloomberg.
Welcome to the world of decentralized finance.
Massive outperformance from Bitcoin.
Bloomberg's covering all things crypto, the people.
The tectonic shift emanating from Washington.
All we're looking for is clear rules and an ability to build in the United States.
Crypto shouldn't be partisan.
The transactions.
Really a record-breaking moment.
Crypto VC is back.
And the technology.
It's really the beginning of a global on-chain economy.
And if America doesn't embrace it, we're going to be left behind.
Bloomberg Crypto, only on Bloomberg.
AI, how it has penetrated pretty much all sectors, including music. AI can write music, compose music. How do you see AI changing the landscape in fashion?
Yeah, AI definitely helped. When I did the jewelry, I used the AI, helping me to give some idea, but ultimately you still have to do a lot of it. To just give you very superficial ideas, and but at the end you still have to customize and how to really make it and do that. I do not think that AI and the technology can replace the human mind at this moment.
Are you concerned one day we won't be able to differentiate designs by AI and designs by an actual designer?
I don't know. For me, I feel that, when a designer doing is the spirit, is the heart that the computer don't have.
Bringing you up-to-the-minute financial news whenever and wherever it happens. I'm Michael McKee at the Federal Reserve, and this is Bloomberg.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
This is Bloomberg Technology.
This is the Asia trade.
You're watching the close. Welcome to Balance of Power.
This is Bloomberg.
Let's get now to high interest. A look at what's making headlines around the world. Russia launched an intercontinental ballistic missile at a central Ukrainian city, according to Ukraine's Air Force Command. If the strike is confirmed, it would be the first ICBM launch since its development during the Cold War. The Kremlin referred questions about the strike to Russia's defense ministry, but said Russia is taking a responsible position to avoid a nuclear conflict. And U.S. prosecutors are charging Indian billionaire Gautam Adani with helping to drive a massive bribery scheme. The charges allege that Adani and other defendants promised to pay more than $250 million in bribes to Indian government officials to win solar energy contracts, and concealed the plan in order to raise money from U.S. investors. A spokesman for the Adani Group denies the allegations. President-elect Donald Trump's transition team has been busy naming cabinet picks, but the search for a Treasury Secretary continues. Apollo CEO Mark Rowan is among the candidates for the role, along with hedge fund founder Scott Bessent, former Fed Governor Kevin Warsh, and Senator Bill Hagerty. I'm sure you have all of those names memorized by now and know the story inside and out, just like we do. We'll bring you any developments as they come. Katie?
Yes, we will. But in the meantime, let's take a quick check on futures right now because we're close to session highs, at least in the pre-market. Of course, NVIDIA shares up by more than 2% right now. You can see that reflected in your big benchmarks. The S&P 500, 0.5%. You see the NASDAQ 100 up by about 0.6%. And small caps, don't ignore the small caps. The Russell 2000 also up about 0.5%, Janali.
You like to see it when the love is evenly divided, don't you? We're going to discuss the market moves and talk about equilibrium with Nadia Lovell. She's senior U.S. equity strategist at UBS Global Wealth. Love having you today after NVIDIA earnings because it sets the stage quite nicely to talk about where NVIDIA, where the Mag 7, where the AI trade falls relative to the broadening trade that everyone was so excited about. Why broaden when you can bet on NVIDIA?
I do think that the broadened trade is important, and we are seeing that. It doesn't have to, we continue to say, it doesn't have to be at the expense of tax, and that's what you're seeing, because there is cash on the side. And we do think that, you know, NVIDIA is important for the AI trade. It is important for tech. It is important for the overall stock market, and it continues to reiterate our view on AI and the opportunity there. We think that the AI opportunity is huge. It's, you know, over $1.1 trillion opportunity revenue across the value stack by 2027, and this is why we continue to favor tech and have it as our most attractive sector, because we think that the spend is going to continue. When you think about what the 4 largest hyperscalers are spending, we think it's going to be over, you know, $250 billion in CapEx, and most of that going to AI next year.
Interesting. So you can't ignore the AI trade. You can't ignore tech, of course. You take a look at your S&P 500 targets. I see you've penciled in 6,600 for the S&P 500 December 2025. It sounds like the leadership that's going to take us there is big tech in your view.
We continue to think that tech is going to lead, but again, it's not going to mean that you're not going to see it broaden out. We do expect some of the cyclical areas of the market to also catch up. We've seen a strong performance from financials recently, and we think that that's going to continue into next year. Remember, we have a yield curve that's now steepening, and we know that that's positive for financials. We have the potential for an ISM manufacturing, which has been below 50 for quite some time, potential for that to start to rebound next year, and that could help some of the more cyclical areas of the market, and you have a Fed that's cutting.
As we have started to talk more and more about NVIDIA and its driver position, we've stopped talking about the Fed, really.
Yeah. Do you want to talk about this?
Does it matter?
It does matter. It does matter, particularly for those other areas of the market and the broadening out trade. You know, right now the market is pricing in a coin flip for December cut, which we don't think is unfair. I mean, reality is when you look at the recent inflation data, it is running a little bit hotter than the Fed had penciled in for year-end, and the rhetoric has started to be a little less dovish. We know Bowman, she's hawkish. We know that, and she has said that, you know, there seems to be a stalling out of the progress on inflation, and so it doesn't seem that she's inclined to cut in December. But you do have Powell that's also saying that, you know, it's not in any sort of hurry right now. We do think that you still get a 25 basis points cut, but that a lot of that is going to depend on what happened in the macro data from now until then, especially on the job markets. And we think that the Fed's pace, the cadence will probably slow in 2025 to more of a quarterly pace.
You know, it's interesting. If you were here yesterday or a day ago, we wouldn't be talking about NVIDIA or the Fed. We would be talking a little more about the consumer because of the really choppy numbers you got out of those consumer companies. If you have hawkish Bowman here, if you have worries about how much the Fed can cut, then really how much do you have to start worrying about the consumer again and their ability to juice up the stock market, right? They're a huge part of what pushes this economy forward.
Absolutely. Consumer is a big part of the overall economy and spending, but the consumer is still spending. I mean, let's be clear about that. It's more about the mix shift. That's shifting, what they're spending on. We're seeing continued softness in discretionary spending, but you know, the consumer is still out there traveling and eating out and things of that sort. And so remember, the consumer propensity to spend depends more on the labor market. And we are continuing to see income growth, and we are seeing a labor market, you know, put aside the October numbers. We know that those were noisy, but we think that the labor market still remains quite healthy. If you looked at the data earlier this week from the state level data and employment, it suggests that, you know, all of the noise, the storms probably contribute about 110K pressure on the labor market. So labor market is probably growing somewhere between 125, 150K in terms of jobs creation every month, and that's still pretty healthy, and you still have some income growth as well.
The consumer's really interesting because it's not necessarily playing out at the sector level like you would expect. We talk about inflation all the time, maybe the weakening consumer a little bit. We have seen pockets of that. Then you take a look at year-to-date performance at the sector level. Consumer staples, that sector only up about 14%. Then you take a look at discretionary, for example, outperforming, at least staples. Make that make sense to me.
Well, it's one stock, consumer discretionary
Tesla.
Recently.
Yeah.
First Buddy is outperforming. Basically, that's what's happening with Tesla in the recent performance. But yes, I think that's a fair question in terms of, I mean, what you wanted to see in Staple this year is really volume growth, right? You remember, Staple has been benefiting in the prior years from inflation. Inflation is starting to come down, and so you really want those companies that are able to grow volume, and that's the pressure that you're seeing within Staple, the ability to see volume growth.
We refer to Elon Musk as the co-president-elect.
There you go.
It's an unelected position.
If you're elected president, can I be your first buddy? I love
Yes, yeah, you can join me at all my rocket launches. Nadia, thanks so much for joining us. Nadia Lovell there from UBS Global Wealth. Later on today on Bloomberg Television, we're going to hear from the CEO of Palo Alto. That's at 11:30 a.m. Eastern on Bloomberg Tech. This is Bloomberg.
Join me for the next generation of Wall Street Week, telling stories of capitalism from business, markets, economics, tech, and climate. Each week, we'll go on the road for a look at what lies behind the headlines of today and what will likely be the headlines tomorrow.
Above all else, it's a mission.
Done nothing but grow immensely. To me, that's an extraordinary sign.
We can be the change that we want to see.
Watch the all-new Wall Street Week. More than what you need to know, it's what you need to think about.
This real momentum from Wall Street. We are basically deep in the European earnings season.
Take a look at how we're faring when it comes to Asian markets.
The countdown is on. Everything you need to get the edge at the end of the market day.
Big tech earnings kick off later this afternoon.
Gilead is coming out right now. We have Take-Two numbers. Back to the markets, right? Our bread and butter.
NVIDIA is one of the best stories in the tech space.
That actually matters a whole lot more.
It might shock some of your viewers.
You're watching The Close.
Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything.
As we spend some time here on the broader presidential race.
Let's focus in on European politics.
Makes you wonder how politics might play out.
All right, welcome back to Open Interest. You take a look at futures right now. We're at pre-market highs on the S&P 500, on the NASDAQ 100. Small caps getting in on the action as well. Less than 4 minutes to go until the opening bell. We're going to take a look at all of these earnings names. Of course, Deere, Snowflake, and of course, NVIDIA. All of that and more coming up. This is Bloomberg.
leader in technology for as long as you have been. Do you think AI is just as landscape changing as everyone else seems to think it is?
Sometimes things are overhyped. I don't think that AI is overhyped.
I think Etsy's uniquely positioned to benefit from AI. Finding that needle in the haystack is tricky. That's part of what makes Etsy both delightful and frustrating to people. And being able to serve the good stuff to the top fastest is where AI can really benefit us.
Our mission is keeping commerce human, and actually we talk about AI as helping us to be superhuman. It's really the partnership between AI and humans that makes Etsy work.
AI can help Etsy's customers personalize their searches and steer shoppers more directly to items they may want to buy. It's also helped the company improve reliability by predicting delivery times more precisely. But that doesn't solve a larger challenge, getting more consumers to think of Etsy more often and ultimately become repeat buyers. To this end, Etsy invented gift mode.
Getting in the top of mind consideration when you're thinking, I have a gift, I'm going to go to Etsy, just getting that to be more habitual. Gift mode provides a perfect opportunity for that. We get to know the gifter, but we also get to know the recipient. So it's a way to, sort of a more viral way to bring in more, introduce more people to Etsy.
Bloomberg Surveillance covers the latest in global markets and the political events that influence your world. Join Jonathan Farrell, Lisa Abramowitz, and Anne-Marie Hordern only on Bloomberg. Context changes everything. It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. Bloomberg ETF IQ, only on Bloomberg.
We are moments away from the start of trading. This is Bloomberg Open Interest. I'm Matt Miller. Kind of a lackluster report from NVIDIA last night, and nonetheless, futures are rising. S&P futures up 0.5%. NASDAQ futures up a little more. Small caps are gaining, too. You hear the opening bells on the New York Stock Exchange. You have the people of BlackRock promoting a couple of ETFs. BAI is one, and TEK is another, which I think, that's thematic, considering NVIDIA was last night. Down the NASDAQ, apparently Mr. and Miss or Mrs. I'm not sure if they're married.
They're married.
Mr. and Mrs. Met there, along with one of the greatest closers in baseball history, I'm told. John Franco there. Check on the averages. For that, we go to Katie Greifeld, standing by with gains. Katie.
I know that you are unimpressed by what we learned from NVIDIA last night, but CEO Jensen Huang said that they're seeing very strong demand for Blackwell, and it seems like, I don't know, traders are taking him at his word. You take a look at the averages right now. The S&P 500 currently up by about 0.4%. We're not quite at 6,000, but we're, within knocking territory. You take a look at the NASDAQ 100. That's where all of these gains are being expressed. The NASDAQ 100, your big tech index, up about 0.5%, but it's the small caps that are in the lead. Of course, we're going to be focusing on small caps at 10 a.m. But for right now, just know that the Russell 2000 up about 0.6%. Meanwhile, we are still in earnings season, so let's talk about Deere right now. It lowered its profit outlook. Farmers are spending less than they did on the onset of the war in Ukraine. There's also concerns around tariffs, how that may impact the index, but you can see the stock just shrugging it off, basically, currently up about, call it 3%, Shanali.
And I'm watching Snowflake over here because this is a stock that had a lot of pain this year, Katie, but today is a very good day. It's up about 27% as the market opens, the biggest gain since 2020. After reporting strong sales growth and plans to buy AI data startup Datavolo, gives it some access to unstructured data, helps it get a little closer to the Anthropic universe, becomes a more interesting AI play, Matt.
All right, so AI in focus. Obviously, NVIDIA is the biggest beneficiary of the craze. It posted a big quarter and beat estimates on sales and on profit as well. Data center revenue doubling year over year, but investors are debating whether the company can maintain its growth or at the same pace that it has been, because Abigail Doolittle, it was beat and raise, beat and raise, beat and raise, and they didn't do it like that this quarter.
Well, at some point, the music is going to at least slow, which it seems to have done in the quarter that was, and the raise that is for NVIDIA, and maybe at some point even stop. We've been talking quite a bit about how even though the growth is phenomenal, it's decelerating, and at some point to well below 100% growth. So investors may be uncomfortable with that. And it's also interesting that the strength was from data centers. But here's a check at the AI that entire complex. NVIDIA, a nice 3.6% gain, but not the volatility that we were all looking at. Sort of a dud here for NVIDIA, in fact. AMD higher, super microcomputer higher, having more to do with the fact that it survives another day on NASDAQ. And then ARM Holdings up 3.4%. So overall, we do have the AI complex intact today. Taking a look at chips more broadly, because of course the Trump administration coming in and the expectation of a protectionist policy, these are numbers for South Korea. One of their big industries is chips. And on a year-over-year basis in November, growing 77.1%. So very strong. Interesting, that's ships. And then chips at 43%. Although for some reason, I think that is maybe supposed to be flipped. But in any case, lots of strength for both ships and chips out of South Korea. So it's going to be interesting to see whether or not the Trump administration in some way does provide protectionist policy that dings that, or other countries, chips being one of the big poster child for the idea of what tariffs can do. And for tariffs, or excuse me, for chips overall, while South Korea's numbers might be strong, investors are a little bit concerned. This is a big bearish consolidation pattern. It's considered a diamond top. If we blew this out, you'd see big gains. So people bought really well way back there. They've been taking profits all year long, but they don't want to do it all together at one spot because then they might disrupt their ability to take profits. Well, you can see the stocks clearly below the 200-day moving average, breaking below this consolidation pattern, suggesting that this entire pattern may in fact break to the downside. If that happens, Katie, maybe tariffs that could come into play with the new administration are going to hit the chips complex.
All right, Abigail, great stuff as always. Let's keep this conversation on chips going now with Allspring Global Senior Portfolio Manager Margie Patel. And Margie, I hear Matt's point that, okay, NVIDIA didn't exactly fulfill the most bullish fantasies that were out there, but as a money manager who is heavily invested in the semiconductor complex, what did you make of what we learned at 4:20 p.m. last night?
Well, the most important thing was that the demand is still very, very strong for as far as the eye can see. And whatever little bit of disappointment was in outperformance was maybe on supply glitches. So that's a problem that will solve itself. So I think it really did is affirm that the strength in artificial intelligence is real, data centers is real, and that really is a vote of confidence in the whole tech sector to continue to have way above average growth into next year.
But for the people who are looking to broaden the trade here, do you think that there's ample opportunity to do so, given where you saw the forecast lean toward?
Well, I think that the idea that the growth will broaden out to all stocks is really not pretty unlikely, because the economic growth is still pretty modest for the year, 2.8%, maybe 1.5% to maybe 3%. And so that doesn't say to me that the more marginal players will be able to have big increases. So I think the growth will continue to be those tech stocks that were leaders this year, industrials that were leaders this year, and a few other stocks like that. And that's where the growth is going to continue into 2025.
But do we continue, Margie, to see the kind of growth that we have been with NVIDIA? What did you say it was up 200% year to date?
Yeah, to year to date.
I mean, sales I get are doubling. The margin is still great, but it's compressed, right? Now it's only 70%. Are we going to continue to see the stock tripling in a year?
Well, I think you're going to continue to see very strong earnings growth, leadership among the stock market. However, I do think we're going to see continued, which we started to see already, erosion in the price earnings multiples that these companies are trading at, really reflecting the fact that as we go through time, the earnings growth rates are going to decelerate, so the PEs will shrink a little bit. A lot of the return so far this year was really price earnings expansion rather than earnings growth equal to some of the performance we've seen in stocks. So we think next year will still be a good year, but more modest, because we don't think we'll see PEs expand the way they did this year.
And NVIDIA right now, in the first few minutes of trading, it's pairing gains now down or now up by less than 1%. And as such, you see the S&P 500 little changed at this moment. And Margie, looking into 2025, if we do see maybe some decelerating growth from NVIDIA, we aren't expecting another 200% rally next year. What does that mean at the big benchmark level? Because it kind of feels like we're getting used to those 20% plus gains.
Well, that's right. But then a lot of that was, I think, PE expansion for many, many stocks. So I think the earnings will continue the same path they've been, which is growth around 8, 9, 10%. There's no reason why the economy should slow down because corporate profits really haven't decelerated. But I do think we're likely to see that PE erosion. And that would say next year we may see much more modest gains and way above 20% this year, say something more matching the profit growth of 10, 12, 15%, something like that for the stock market.
You know, it's interesting. In the first 8 minutes of the trading day, Margie, it's been a pretty interesting set of moves here. You've had the S&P futures in the morning start out higher. They are now lower, the biggest drag being Alphabet at the moment. And Alphabet, of course, we know is fending off what you're seeing over at the Justice Department, trying to have them separate Google Chrome, to have them sell it, to curb monopolistic powers here. When you look at that kind of overhang on big tech, particularly Alphabet, does it concern you on broader indices at all, like the NASDAQ 100, or even just the broader Mag 7?
Well, I think it has put a little cloud over Alphabet. People worried about what these actions will be. Actually, we've seen actions by governments over the past, say, decade trying to rein in some of big tech. And really, it hasn't changed the fundamentals, which are these companies are leaders in their field. They're growing faster than all their other competitors. And even if you chip away with some kind of a corporate edict that they have to follow, I think they'll still be very, very strong stocks. It doesn't change the fundamentals of their business.
Margie, thanks so much for joining us. Always great to get insight from you, especially when we get these chip makers reporting. Margie Patel, they are coming up. Deere sees more challenges next year as farmers hesitate to buy more equipment, but investors are still bullish. This is Bloomberg.
In case you missed it, on Bloomberg Technology.
We are very focused on playing one game and one game only, and that is being free, frictionless entertainment for consumers. But what I will say is we are doubling down on the strategy. We believe it's working. We think the tailwind's in our favor, and it's on us to continue to deliver.
Whenever you're doing something innovative that hasn't been done before, there's a lot of trial and error and iteration. It just always has these zigs and zags along the way, and I think where we've been successful is really being reactive.
Hollywood is the history of technology. Like, we are here because of a technological breakthrough, right? And so we sometimes forget that art and technology kind of like come together always. And for us, it's like demystifying a little bit the technology. Again, if you understand AI as a tool for humans, then it changes the narrative. And it's less about fearing it and more about embracing it.
Don't miss Bloomberg Technology, live every weekday.
Morning, this is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia. We'll walk you through what you need to know to kickstart the European trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything. Get your fixed income fix. Watch Bloomberg Real Yield every Friday right here on Bloomberg. Context changes everything.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Onim, only on Bloomberg.
Jumpstart your trading day on Bloomberg Open Interest.
2 hours of single stock stories that are driving the opening bell action.
We'll take you to Wall Street, Main Street, the C-suite, and beyond.
These are companies that are growing their market.
The great companies in the U.S. are the companies hitting the cutting edge. That's a different story.
Get the inside track on what's buzzing in markets.
With the players who are shaping the narrative.
If you have bad earnings reports, you're going to get punished.
They're not buying what the industry is selling. Join us on Bloomberg Open Interest every trading day, only on Bloomberg. All right, it's time now for top calls. Some of the analyst action in focus this morning. And first up, Palo Alto Networks getting raised to a buy at Rosenblatt Securities. The firm highlights Palo Alto's strong first quarter performance and says that the security software company's strategy is driving larger deals and bigger growth. Next up, HSBC says that Target is no longer a buy. The firm downgrading the retailer to a hold after it cut its full-year profit outlook yesterday after a disappointing quarter. The downgrade is the latest sign that Wall Street is losing patience with the retailer's turnaround plan as Walmart continues to gain ground. And finally, we have William Blair saying that Ulta is no longer a buy, cutting its recommendation on the beauty retailer to neutral. The analyst says that there's a longer-term risk embedded in the beauty category, and he sees more uncertainty ahead, Matt.
Yeah, I have to agree. There's more uncertainty to come. Let's talk about tractors right now. Deere joined rivals CNH and AGCO in lowering its outlook for 2025 as farmers spend less on equipment than they did at the onset of the war in Ukraine. Of course, that's the breadbasket of Eurasia. Now, the industry is also bracing for tariffs from the incoming Trump administration. Let's discuss with Bloomberg Intelligence analyst Chris Cellino. So, Chris, what's the story look like for Deere? Because it didn't look great to me, lower than expected profits next year, and yet investors are bidding up the stock today.
Yeah, you're right. I mean, the 2025 guidance wasn't great, but buy-side expectations heading into the print were very, very low. A number of their competitors reported big misses and cut their outlooks this quarter. So I think the outlook here is maybe a little bit better than some investors had feared. That being said, the farm economy is still quite challenged and will be again next year. I think there's growing optimism that 2025 will kind of mark a bottom in the cycle. The worst of this large ag inventory destock seems to be behind us. So the magnitude of those production cuts should begin to moderate as we move through next year. Those are the positives. I don't think we're completely out of the woods yet, though. And I think it's still maybe a little premature to call a cycle bottom. One, farm fundamentals continue to remain weak. And two, we're on the precipice of another trade war with our largest ag customer. So we think this really runs the risk of extending this downturn.
Speaking of, I want to pull up now a chart for the full year for Deere because it was a really weak year last year. This year has been sluggish as well. But the worst of the pain in the stock actually came well before the election. And after the election, you did see a dip off, but then a rally back up. And so I'm wondering how much real risk there's not being priced in right now when it comes to those trade tensions and the impact it could have on the stock.
Yeah, it's significant. I think the trade uncertainty is real, and I don't think it's fully appreciated yet. And I think uncertainty is like kryptonite for capital spending on farm equipment. Farmers are not going to go out and spend until there's better trade visibility with arguably our largest customer. How exactly this unfolds, nobody's 100% sure yet. So I still think farmers will take a wait-and-see approach to spending.
Let's get more specific when we talk about trade. I want to talk about tariffs in 2025 because, of course, President-elect Donald Trump, he's threatened tariffs specifically on any products that Deere makes in Mexico and then sells in the U.S. You're talking about farmers here, but talk about Deere, for example, and how you approach them as an analyst. How do you potentially model that into their results in 2025?
Incredibly difficult. I do think the biggest risk here is with China because, they are the largest buyer of our crops. We sent nearly $30 billion of ag exports to China last year. That was 17% of all of our ag products. They're the largest buyer of soybeans. That is a big, important crop, particularly for deer and row crop farming. Then you throw on top of that additional tariffs on other regions like Mexico, which is still also an important buyer of our crops. It could be incredibly complex and difficult to model this in, to say the least. And again, I go back to my point of, if farmers don't have any kind of visibility on some of their relationships with their largest customers, they're just not going to go out and spend.
What about other costs that they deal with? I mean, in the event that fuel becomes less expensive, and I know prices at the pump have been coming down, but we could see even more relief in the event that electricity becomes cheaper. Do farmers then have more to spend on equipment? Is that kind of a jump you can make, a leap you can make?
No, I don't think so. Certainly to help with their P&L a little bit, but ultimately at the end of the day, what drives farmer income and farmer profitability is crop prices, and they get that through corn, soybeans, wheat, and selling to some of their larger customers. So that was ultimately what's going to drive demand for deer.
Chris, we have to leave it there. Thank you so very much for all of your analysis. That is Bloomberg Intelligence industrial analyst Chris Ciolino. Now coming up, we're going to go into the hedge fund world. Two Sigma cuts 200 jobs in its biggest restructuring in the hedge fund's history. We're going to look at the shakeup next in our Wall Street Beat. This is Bloomberg.
U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers Jobs Day like Bloomberg. Bloomberg covers the world with unmatched reach and resources. From more than 120 countries, the moment news breaks, 24 hours a day. Bloomberg, context changes everything. It's the world's second largest economy with a growing influence in global affairs. But geopolitical uncertainties, deflationary pressures, and questions about foreign investment linger. Bloomberg, the China Show, brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China. Bloomberg, the China Show. Weekdays around the world, right here on Bloomberg. Context changes everything.
Welcome back to Bloomberg Open Interest. Let's get a check on the stock market right now. We're about 20 minutes into the U.S. trading day. You can see we're trying to decide what to do right now. The S&P 500, it opened about 0.5% higher. We erased gains, of course, as NVIDIA swings back and forth. Currently higher by about 0.2%. A real tug of war going on in the NASDAQ 100, though. The shares of Alphabet down pretty mightily at the moment, to the tune of about 5%. NVIDIA shares higher by about 1.7%. You add it all together, your big tech benchmark only higher by about 0.1%. The small caps just merrily rallying along here. The Russell 2000 currently higher by about 0.7%. That has been your outperformer over the last several weeks and potentially months here, and it is certainly your outperformer today, Sonali.
Merrily. Are we feeling a little holiday vibes here?
Moving merrily along.
Anyways, we're going to go now to the Wall Street Beat. The hedge fund firm Two Sigma cutting about 10% of its workforce after a strategic review by the company's new co-CEOs. Bloomberg's Hema Parmar has the details. She co-wrote the story today, which is now one of the most read on the Bloomberg terminal. You can find it at Bloomberg.com as well. two new CEOs, one who is kind of a longtime employee, one who came from the outside, was the legal counsel over at Lazard, now helps lead Two Sigma as a co-CEO. Why did they think, after this feud between the co-founders, that cutting 200 jobs would be the right move?
Yeah, so this is really the first big public sweeping change we've seen them make at Two Sigma, which is where the two billionaire founders were in such a dispute and such a long-running multi-year feud that they stepped down. And so these two new co-CEOs running the firm, cutting 200 staff, 10% of the firm, in a way to, they would say probably, to be more efficient and to try to streamline the firm a little bit more. There had no portfolio managers have been let go, but it's been more people on the operations side, the coding, the more like slightly back office.
By the way, I thought you were going to say, why did they think co-CEOs was a good idea again? After they learned the first time it was a horrible idea.
I actually know these guys, and for this purpose, Scott Hoffman has an easy touch. He's led a lot of transitions over at Lazard, twice actually.
I just mean most times co-CEOs is a bad idea.
Otherwise, it's
Everybody knows that, and yet they do it anyway.
Co-presidents.
Yeah, that's a very good point. By the way, it makes sense to me. I mean, I feel awful, and as I'm sure they do for anyone who loses her or his job. But we saw Brevin Howard do the same thing earlier this year, and it is about efficiency in a lot of cases, right? You get bloat, you get too many people working in the same kitchen.
Too last year, yeah.
And Brevin Howard has done very well.
Yes, yeah. So 10% of job cuts in Brevin Howard sometime this year. Schoenfeld also, after they went through a lot of changes and a lot of tumult with Millennium, they had job cuts as well. So you do see some streamlining at these firms, and you're seeing some of these firms, they've gotten so big, there's been a talent war, they've staffed up, performance has been great, and then they get to a point when they're like, all right, we need to really take a look at ourselves. Brevin doing very well, having their best year since 2020, I believe, on bets related to the election, and it's working out very well. This is a macro trading firm, and so you saw that they bet quite well around the election recently.
So you've seen job cuts at some of these other hedge funds, but there are some idiosyncratic nuances going on when we talk about Two Sigma. You think back to that public feud between the founders, John Overdeck, David Siegel, which was playing out in public filings, which were fun to follow. I have to imagine this stems out of that, these sweeping changes. Are there more to come?
There are more, likely more changes to come, unclear about any more job cuts. But this is a firm where the difficulties between the two founders got so bad that it was impacting staff, it was impacting hiring, retention, and it was so bad that the firm actually put in their filings, regulatory filings that are public, that it counts as a conflict and it counts as something that could impact the firm and impact performance. And so that's a very rare thing for any hedge fund to do, let alone a firm as secretive as Two Sigma.
All right, fascinating stuff. Hema, thanks so much for joining us. Hema Parmar covers hedge funds for us, and you know, Shonali does as well. In fact, today, Shonali has a pretty exciting interview with one of the most recognizable faces of the hedge fund industry.
First, huge shout out to Hema and the team here. And Hema Nishant is breaking so much news this week. And when you think about it, what's interesting to me about this is Two Sigma really having to change course. It's not an easy world out there for quants anyway. Well, no, one of the big questions I have for Ken Griffin is he told Nishant this week that multi-strats, the boom times are kind of over. So we're going to get into that a little bit today and what he sees as the future of the hedge fund.
This is my main point, is that you're going to interview Ken Griffin today. That's what I'm trying to say.
I've been knee-deep in questions.
He has had a lot to say this week. I mean, just looking over at the terminal coverage, for example, he's investing in nuclear. He says it's the future, the boom in multi-strats being over. Interesting to hear that
Anxiety
from
about trade
Citadel.
wars.
Yeah, it's fascinating. Looking forward to that.
All right, so at noon, right? At the
noon.
Economic Club of New York.
Exactly.
I'm trying to promo this interview for you.
Thank you.
Coming up in the next hour, Goldman's Greg Tuorto shares his 2025 outlook with a focus on small caps. Then we're going to talk to the CEO of Range Energy about electrifying trailers.
Today, I'm going to talk about how to succeed with a startup. Obviously, more than can be said here in 20 minutes, but I will do the best I can. The most important thing, the number one lesson we try to teach startups is that the degree to which you're successful approximates the degree to which you build a product that is so good, people spontaneously tell their friends about it. Startups always ask us for the secret to success. They always want to believe it's something other than this, because this is really hard to do. But this is it. If you can build a product that is so good, people spontaneously tell their friends about it, you have done 80% of the work that you need to be a really successful startup. If you think about the most successful companies you know, Google, Facebook, whatever, you probably found out about them because a friend of yours said, you got to try this, it's great. So this is the bar. Something that people love so much they tell their friends about it. One important indicator for a product like that is a product that's simple to explain and easy to understand. If you can't explain in a few words what you do, and if at least some people don't say, oh, that's pretty interesting, that's usually a mistake. It's usually a sign of unclear thinking or a need that is not big enough.
I want a bank that shows me what I spend instantly. We're Monzo. Give us a go.
See? Well, I want a bank that can help me budget for the things I need, like a new leather jacket for Bingo.
We can do that.
Bingo's my cockapoo.
Hi, Bingo.
It's a real faff to sign up.
It takes less than 10 minutes.
Race you.
You're on. Time's up. How'd you get on?
It's a draw.
Is it? We hear you, Bingo. You make Monzo Monzo.
Hi, I'm Laurie Haynes, CEO and co-founder of Shirar, and I'm really excited to tell you that we are going to be raising funds for Shirar again. After a successful raise in 2023, it's time to scale.
We hope that you enjoy the pitch deck and the financial model. Any questions, please don't hesitate to ask us, and we can't wait for you to be part of Shirar.
I will show you how to get the best funding for your startup idea. Let's get started. Here's the deal. If you have an amazing startup idea and need funds to fuel it, we're here to help. Simply send us a video where you explain your idea. Make it clear, concise, and compelling. Hook us in with your passion and vision. Don't forget to include your contact details so investors can reach out directly. This is your chance to shine and get your idea in front of people who can make it a reality. Imagine turning your startup dream into a thriving business. It all starts with that one simple step. So what are you waiting for? Grab your phone, hit record, and let your idea fly. The future of your startup could be just one video away. Remember, be clear, be passionate, and most importantly, be you. We can't wait to see what you've got. Let's get funded now. I will show you how to get the best funding for your startup idea.
Specific medical supplies created conditions of life calculated to bring about the destruction of part of the civilian population in Gaza.
They're cleaning up in and around Seattle after a deadly bomb cyclone that brought down trees and damaged homes. An atmospheric river fueled the storm in Northern California. CBS's Rob Marciano is in Eureka.
The onslaught of wind and water continues. Massive waves coming in here, 10 to 20-foot breakers, punishing this coastline.
Counting on Social Security to get you through your retirement years? New survey finds 73% of working adults aren't sure the benefits will be there for them. Bankrate's Mark Hamrick.
I think Social Security will continue to be around. The big question is, how much will those payouts be relative to what people expect?
Surgeons at NYU Langone Health have become the first in the world to complete a fully robotic double lung transplant. 57-year-old Cheryl Merkar had been diagnosed with chronic obstructive pulmonary disease. Dr. Stephanie Chang performed the 7-hour surgery in New York.
We disconnect the lung from the heart and from your airway.
prepare everything for sewing in the new lung, and then put the new lung and sew it in, all using a robot.
Mercar says she could breathe better the second she opened her eyes. They could be getting rid of some humans in the big leagues. CBS's Jim Crisula.
Major League Baseball will test robot umpires at 13 spring training ballparks. That could lead to regular season use in 2026. MLB has been experimenting with an automated ball strike system in the minor leagues since 2019.
This is CBS News.
.com/free.
There's a new rideshare offering that'll allow room for travelers to pack in at the airport this holiday season.
That's a lot of luggage for a little vacation. It's called Uber XXL for rides to and from 60 airports throughout the world, including 40 in the U.S. and Canada. I'll get the luggage. Riders get access to larger trunk space and 6 seats. Extra large trunk space. Business Insider says the new service is different from Uber XL, which provides a van or SUV with 6 seats, but doesn't promise a large amount of space for your luggage.
There's not enough space.
Christopher Cruz, CBS News.
This year's National Book Award for Fiction goes to Percival Everett.
Those boys couldn't sneak up on a blind and deaf man while a band was playing.
His novel James retells Mark Twain's adventures of Huckleberry Finn from the perspective of Huck's companion, an enslaved man named James. Jason DeLeon's Soldiers and Kings won the award for nonfiction. Deborah Rodriguez, CBS News.
This is Bloomberg Intelligence with Alex Steele and Paul Sweeney.
The real outperformance has been the U.S. corporate high yield.
Are the companies lean enough? Have they trimmed all the fat?
The semiconductor business is a really cyclical business.
Breaking market headlines and corporate news from across the globe.
Do investors like the M&A that we've seen?
These are two big-time blue-chip companies.
The window between the peak and cut changing super fast.
Bloomberg Intelligence with Alex Steele and Paul Sweeney on Bloomberg Radio.
Good Thursday morning from the Bloomberg Interactive Broker Studio in New York City to our worldwide audience. We are streaming live on YouTube, so head over to youtube.com, search Bloomberg Podcast. Coming up today, we're going to check in with Mandeep Singh. He's a Bloomberg Intelligence senior technology analyst. Get his thoughts on these NVIDIA earnings. They seem pretty good to me. Big numbers in terms of growth rates. Dan Williams, he's a reporter for Bloomberg News. He's based in Jerusalem. We're going to get his reporting on the ICC issues arrest warrant for Israel's Netanyahu on war conduct. Marianne Bartels, chief investment strategist at Sanctuary Wealth. We'll get her market outlook here. We've got a new administration coming in. Has that changed her outlook for these markets? But right now, let's kick everything off. We got a Bloomberg Business Flash from Lisa Mateo. Lisa.
You got it. And this Bloomberg Business Flash brought to you by IBKR with Interactive Brokers Forecast Trader. You can trade your views on key economic and climate indicators. Visit ibkr.com/forecast. Get started today. All right, we've got stocks mixed. Shares of NVIDIA struggling to hold on to a record high right now. Those shares down more than 1.5%. We get to NASDAQ futures down 0.9%, 170 points at 18,801. The Dow up 0.1%, 87 points, 43,494. The S&P 500 down 0.2%, 14 points at 5,902. The 2-year yield 4.29%. That's down 2 basis points. The yield on the 10-year 4.38%, and that's down 2 basis points. To currencies, the Bloomberg Dollar Spot Index down about 0.1%. We have the Japanese yen stronger at 154.02 against the dollar. Euro, British pound weaker, and we have Bitcoin nearing the $100,000 mark. That's after Strong volumes. This week's debut of options on BlackRock's Bitcoin ETF helping out. It's now at around 96,000. Speaking of which, MicroStrategy, that's the largest publicly traded corporate holder of the cryptocurrency. Their shares are up just a fraction right now. And then Snowflake, that's another mover on the market. We have a sales outlook beat estimates right now. Snowflake shares up 30%. More economic data out. Initial jobless claims dropped again, the lowest level since April. 213,000 applications filed last week. And this just out, existing home sales for October. Survey was for 3.95 million, coming in a tick higher, 3.96 million, but it was lower than the prior revised 3.83 million. For on-demand news 24 hours a day, subscribe to Bloomberg News Now, wherever you get your podcasts. I'm Lisa Mateo. That's a Bloomberg Business Flash. Paul and Nora.
Existing home sales month over month, up 3.4% versus a consensus of 2.9%. It was negative 1% last month. So existing home sales, maybe a little bit better than expected. You're not seeing it, are you, Lisa? Because
No, I'm not.
You're in that market. Your market is crazy, right?
It is. Over in New Jersey, like getting outpriced left and right. Like not even, you put it, it's a $600,000 house going for $740,000. That's what I'm dealing with.
Crazy. There's just nothing out there. That's the supply. I mean, it's tough to be a real estate agent today. If you're looking for volume of sales, there's not much going on out there. All right, Lisa Mateo, thank you so much. We appreciate it. Alex Steele, Paul Sweeney, we're live here in our Bloomberg Interactive Brokers studio, streaming live on YouTube as well. Market Drivers today is brought to you by Commonwealth, supporting more than 2,000 independent financial advisors with a 2-to-1 advisor-to-staff ratio. Small firm attentives, big advisor impact. Go to commonwealth.com to learn about our consultative support and technology. A little bit of red and green on the screen here today. The NASDAQ taking on the chin, off about 0.8%. NVIDIA off about 1%. I thought the numbers were good, but what do I know? Norma Linda joins us here. She covers all these equity markets for Bloomberg News. Norma, what are you looking at?
Well, I've got a couple tech names for you, Paul. We're seeing information technology as the second sector that's lower in the S&P 500 today. Let's start with NVIDIA, as you mentioned. I mean, this stock has been fluctuating up, down, as I'm seeing it now. We're seeing shares down 1.2%. Now, this is after the results that we saw from the company were not enough to impress Wall Street. The company's revenue forecast for the current quarter only exceeded estimates by $400 million. It seems like people are very harsh on this company right now. I mean, we're so used to seeing these massive beats. People are looking for a knockout quarter and knockout performance to drive the stock higher. But it seems as though, despite the fact that we are still seeing growth from the company, people are being quite critical today. So I am seeing stock down a little bit lower today. And of course, we do know that as of yesterday's close, the stock had nearly tripled in percentage value.
Yeah, you're exactly right. Up 190% year to date. So,
insane. Insane.
Yep.
But I'm also keeping an eye on Snowflake. I mean, we know that this is a software solutions firm. We're seeing shares surging for their best day since 2020. Wow. They're up, jumping 32%. Now, Citi actually called this company. They said that this was a redemption quarter for the company. They said they were particularly encouraged by the stabilization of its NRR and a lot of different customer additions that they're seeing in terms of global 2K there. But, I mean, something that we need to keep an eye on, it says that we have Morgan Stanley saying that the company maintains a leadership position in the intelligence cloud world before getting more fundamentally positive on the stock. So a few things to keep an eye on, but this is some really good news for the company. We have the CEO coming on BTV later this morning.
Nice.
So something to keep an eye on.
For you. All right, anything else out there?
I mean, let's wrap things up with Palo Alto Network. That's ticker PANW. Shares are currently pairing losses, but down as much as 3% today. This is a network security solutions company, and analysts are flagging a billings decline for the company. It approved a 2-for-1 forward stock split, so something to note there. But it did give a forecast that is in line with consensus estimates, as of course billings fell from the prior year. But this was a bit of a confusing report here because they changed the way in which they report. But we are seeing shares lower off of that headline weakness.
All right, Norma Linda, thank you so much. We appreciate that. Norma Linda, she covers all the equities for Bloomberg News. Join us here in our studio. All right, folks, what would you like to hear on Bloomberg Radio? Help make shows like ours even better by taking our Bloomberg audience survey. Visit youtube.com/Bloomberg podcast and click the link in our profile or community section to take the survey, which is hosted by our partners over there at Material. Fill it out now at youtube.com/Bloomberg podcast. All right, offspring number 4 bought NVIDIA. He's down on his trade. And he bought it from his brother who works in the financial services industry. So we were on a conference call yesterday, heated
talking about breaking down the quarter for NVIDIA. I thought the numbers were good, but let's talk to an expert. Mandeep Singh, Senior Technology Analyst for Bloomberg Intelligence. Mandeep, what'd you think of it? The numbers came in, a little bit better than expected. Guidance pretty solid, but again, the whisper was probably a little bit higher. So
yeah, and look, when you are priced for perfection, that NVIDIA is always, any slight miss in the networking side, which was the case here, or even a gross margin degradation, which they said will go up in the second half of next year, so it's really a transitory thing, will have an impact on the stock. And I think overall, the demand side looks pretty solid. They said Jensen called out there will be no CapEx digestion until the data center spending hits $1 trillion. That's huge. I mean, just think about, how much runway he thinks without a pause. Now, does the market believe it? Probably not, given what we heard at our conference yesterday is it's moving from training to inferencing. And on the inferencing side, there is probably more.
What does inferencing mean?
So once you have a trained model, you are deploying that model in copilots or chatbots.
Okay.
And it's basically a trained model that's being used for answering queries, and that's inferencing, answering queries or, providing some productivity benefit. And that's where, do you really need a high-end NVIDIA chip? The answer is divided. Some people say for the older versions of NVIDIA chips, you could use that for inferencing. The latest one will continue to get used for training. And that's a plausible answer, but as we have learned, there is growing competition on the inferencing side from the likes of AMD, as well as startups like Sambanova, Cerebras, and all these companies are trying to get some portion of that pie.
And folks, Mandeep was referencing a conference he hosted yesterday. He and Anurag Rana, our other technology analyst at Bloomberg Intelligence. It was a phenomenal conference. I mean, they had some just amazing speakers there. And the next time you get something in your email saying, hey, come to a BI-sponsored conference, get off your rear end and get to these conferences, because some seriously smart people get together and you learn a lot. I did hosting a couple panels yesterday. Mandeep, so when you listen to the management team at NVIDIA, where do they say, I mean, can they look a year, 2 years in advance? How do they think their business is going to develop?
Yeah, I mean, look, the fact that they're saying gross margins will go down to around 71% over the next 2 quarters, but rebound.
71?
71.
Gross margin.
Yes.
Wow.
And it's again, terrific when you look at it from every angle. It's just the way expectations were priced for, it's mid 70%. So the fact that they are going down to 71%, but in Jensen's, case, he called out those margins going back to 75%. So it's really a ramp up of their new architecture, Blackwell, which is causing the transitory gross margin degradation. But once they get that in full production, he expects gross margins to go back to 75%. Now, I do think, again, there will be more competition, but he clearly doesn't believe that to be the case.
All right. I mean, here are just some crazy numbers, folks. Just total revenue. Let's go really simple here. Revenue. Roughly calendar year 22, 27 billion of revenue. Calendar year 24, 128 billion of revenue. Have you seen anything like this in technology?
I mean, the closest thing that comes to mind is the build out of the internet infrastructure back in 1999. I think Cisco had a similar ramp up on the networking side, but what's different is NVIDIA clearly has the balance sheet, as well as they are in more products than Cisco was. So Cisco was just providing the networking gear. NVIDIA has a software line, they have a networking business, and then their core chip business. So clearly, NVIDIA is going with the platform approach.
This is a stupid income statement. They have 55% net income margins, and they have no CapEx to speak of. 2, 3, 4 billion. So the free cash flow is just freakish. So what did they do with the cash?
Well, right now they're doing some share buybacks, but acquisitions may be on the table if the incoming Trump administration loosens the regulations. So,
okay, let's go down that road there. What's the feeling in Silicon Valley in technology about that opportunity? Because boy, your industry, and particularly some of the bigger companies that you cover, the Amazons of the world, the Googles of the world, they can't do anything these days. Is the expectation that might loosen up?
Well, the overall M&A environment and IPO environment may get better. But in terms of big tech, I doubt it's
Right.
anything is changing on that front, especially for the likes of Alphabet and Meta. Probably an Apple or an NVIDIA may be able to do more acquisitions, but I think the companies that are in the crosshairs of, what the incoming administration feels on the consumer side, I doubt they'll allow them to make any further acquisitions.
All right, man. Good. Thanks so much for coming in here. Mandeep Singh, Senior Technology Analyst, Bloomberg Intelligence. He and Anurag Rana threw a great technology conference yesterday, packed full of some really smart investors. Again, folks, the next time you get an invite in your Bloomberg inbox, jump on it because BI is sponsoring some really good investor conferences. We're going to have more coming up. This is Bloomberg. Good morning.
Markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And this Bloomberg Business Flash brought to you by Wells Fargo Advisors. Consider Wells Fargo Advisors Financial Network, where you can run your business with true independence supported by unrivaled resources. Learn more at WFA.com/resources. All right, we have stocks just struggling for direction. Traders still digesting NVIDIA's results from yesterday. We have NVIDIA shares right now down about 1%. NASDAQ futures down 0.4%, 84 points. We have Dow future, the Dow, not futures, up 0.4%, 186 points. S&P 500, little changed, up about a point. We have the 2-year yield at 4.29%. That's down 1 basis point. The yield on the 10-year 4.38%, and that's down 2 basis points. To commodities, we have oil, gold rallying. Investors still on edge about the war in Ukraine. We have spot gold higher at $2,666 an ounce. Brent crude up about 1.5%, $73 a barrel. WTI crude at $69 a barrel. We have Bitcoin right now about 97,000. To earnings we go. Deere, the world's top farm machinery maker, well, it expects lower profits next year. That's due to lower spending from growers, but shares still up 6%. And shares of BJ's Wholesale Club, they're up 5%. Adjusted earnings per share for the third quarter beat estimates. The company says, though, it will raise those membership fees for the first time in 7 years. That's starting in January. For on-demand news 24 hours a day, subscribe to Bloomberg News Now, wherever you get your podcasts. I'm Lisa Mateo. That's a Bloomberg Business Flash. Paul.
Yeah, Lisa, you mentioned the Deere. I mean, it's up 6% today. It's actually a 52-week high for whatever that means, but maybe that just says, maybe analysts and investors saying maybe the trough for the farm economy may be in sight or kind of here, and maybe they're looking ahead because...
So they're still being positive.
Maybe a little bit positive. That's interesting. Because again, you think about this is a complete call on the U.S. farmer here and farm income. When the farmers have more money, they buy more tractors. So I always love following the Deere story. I think it's very interesting. Lisa Mateo, thank you so much. We appreciate it. Alex Steele, Paul Sweeney, we're live here in our Bloomberg Interactive Broker Studio. We're streaming live on YouTube as well. So head over to youtube.com, search Bloomberg Podcast. One of the most read topics or stories on the Bloomberg Terminal today has to do with Israel. The International Criminal Court issued an arrest warrant for Israeli Prime Minister Benjamin Netanyahu for alleged war crimes. Let's break that down with Dan Williams. He's a reporter for Bloomberg News. He is based in Jerusalem. Dan, give us the story here. What does this really mean? Because the headline kind of jumps out at you here.
It is a dramatic development. We've now seen some 13 and a half months of open warfare between Israel, Hamas, and Israel and Hezbollah in Lebanon, and other Iranian-backed parties in the region. That has now evolved into open lawfare, with this very important court issuing arrest warrants against the Israeli Prime Minister Benjamin Netanyahu and the former Defense Minister Yoav Gallant. Those are arrest warrants that are actually binding on more than 120 countries that are signatories to the treaty that underpins that court's conduct. Israel is not a signatory, neither is the United States. Israel had sought, however, to contest this request for the arrest warrants. That failed, as we discovered today, with the court saying it had rejected the Israeli motions and upheld and actually decided to issue those arrest warrants as sought by the special prosecutor.
Has the United States made any statement on this matter? Because the support for Israel, generally quite strong in the United States.
Indeed, and throughout these proceedings, we're talking about several months of anticipation. I believe the special prosecutor formally filed his request for arrest warrants back in late May. The Biden administration said openly that it thought this was baseless. Israel has obviously been far more vociferous, calling this anti-Semitic, likening it to the infamous Dreyfus trial. I think both countries will be looking to what the next U.S. administration, the Trump administration, will do. And significant parties in that administration are already saying that when the time comes, they will double down on their support for Israel. The question is, what does that mean? Are they going to try to convince like-minded countries in Western Europe to withdraw from the court, or on an individual level to state that they will not abide, they will not honor these arrest warrants? As I said, it's a dramatic development. And I think the Israelis will be strategizing very, very intensely right now.
Why historically has Israel and the United States not been a party to this court?
I think it comes down to a fear for their autonomy. Also, the fact that certainly since the war on terror, the United States has been waging at times quite unilateral national security policies abroad, wars that did not always have international support. I think the argument is that this would effectively intrude on self-determination, self-defense, the sovereign rights of a country. And also they would argue that this court is designed to bring justice to countries where there is no working inside internal organic justice system. Now, Israel says its justice system works perfectly fine. It's had the support of some Western countries for that, but it seems that the ICC has decided not to find in favor of that point of view this time. So in effect, Israel, or at least these two leaders, will be treated like pariahs in many of the countries that are required to abide by it. It's a development that I think Netanyahu will find very, very unwelcome.
I can imagine. Hey, Dan, where is, just to educate us, where is the International Criminal Court? Where is it based? And are there certain countries that have particular influence on this court?
It's at The Hague in the Netherlands. That's also where the International Court of Justice is. That's a court with a slightly different mandate and different jurisdiction. And again, it's an extension of various treaties and conventions that arose, especially after World War II. The bulk of the world's countries are signatories. It means they have standing to argue, to submit. It also requires them to enforce when decisions such as this come down.
All right, Dan, thank you so much for your reporting. We really appreciate that. Dan Williams, he's a reporter for Bloomberg News. He's based in Jerusalem. Again, on the geopolitical front, just another major development. The International Criminal Court issues an arrest warrant for Israeli Prime Minister Benjamin Netanyahu for alleged war crimes. So we appreciate getting that on-the-ground reporting from Israel. Let's get back to these markets. Again, we've kind of got red and green on the screen. The Nasdaq's off about 1%, but the S&P and the Dow are up slightly. Let's get a sense of where we go here as we wrap up this earnings season. Marianne Bartels, Chief Investment Strategist at Sanctuary Wealth here. Marianne, thanks so much for joining us here. Love to just step back, you know, maybe get a 30,000-foot view from you on these markets. What are you talking to your clients about here today? Because, boy, a lot has changed in the last couple of weeks with elections and geopolitics and earnings and a lot of moving parts out there.
Well, we just released our 2025 year-ahead forecast. And the name of it, or the title of it, is All That's New, That's Old. Yes, we have AI, we have blockchain, augmented technology, and we believe that this is really altering not just the U.S. economy, but the global economies. And we've likened this to similar periods from 1995 to 2000, but also from 25 to 29, where we also had new technologies, although they don't feel like new technologies, you know, the automobile, the railroads. And markets did phenomenally well because economies grew. So we believe we're in this extraordinary, you know, growth cycle being led by right now NVIDIA, which we talked about. They're really altering the next generation of technology. So we have our forecast for the S&P for next year at 7,200 to 7,400.
Wow.
And yes, that means another 20%. But when we went back and analyzed the 90s, from 95 to 2000, we had markets up 20% or higher 5 years in a row. Now, in 97 and 98, we had bear market corrections within the year because we had a Thai baht crisis, we had a Russia default and a long-term capital, a little bit of a financial crisis. But those markets still rallied strongly by the end of the year, and we think we're in a very similar position.
Talk to us about earnings. What did you take away from this earnings cycle? We're just wrapping up with some retailers this week. What is your view of earnings out there? Again, to get to that, you know, any kind of S&P handle with a 7 in front of it, you have to be pretty bullish, I would think, on earnings.
I am. I think there's a lot to do with earnings. Markets really need earnings to grow. And we see the economy growing next year, especially since we've already had a 75 basis point cut by the Fed. Now, they may slow the pace, but they're more in an easing cycle, which we think is going to be very bullish considering the economy is growing around 3% and we're at full employment. The consumer has money to spend. Household net worth is at a record high. When we look at disposable income, there's enough disposable income for the consumer to spend. And as you know, and your viewers know, the consumer really is the main driver of our economy. So we do think the cycle is being led by technology. This year, it's been really all about semis. We think that narrative is shifting a little bit more now to software. Not that we're negative on semis, but we think the pace of their ascent can slow down. And now we see a cycle of software growing as we go into 2025. Another positive for earnings is the steeper yield curve for banks. And we also like the capital markets. Those are important ingredients to keep an economy going. I always say the banks are the heartbeat of the economy, and the private markets, the private credit markets are flush with liquidity to provide to companies. So we're very optimistic, and we see also profit margins growing. So we think we're really in that Goldilocks environment.
Well, I think I may be calling the top in the tech market because my youngest offspring just bought some NVIDIA, so that's got to be the top. So if I wanted to diversify, Marianne, and try to find some value out there, where do I go?
So we think the best, if you're looking for value, we do think the best value is in the financials, particularly in the banks and also the capital markets. You know, energy is good value, but we don't really see crude oil firming up. We think crude going into 2025 is going to be either a range or to slightly down, especially with the Trump administration. There's concern that will add to supply. And if you add to supply in a weaker demand environment, which we're in particularly because of China, we think that, you know, energy is really not the place to be for 2025. At least for value. So the value is really, I think, best in financials. What's really shocking is, you know, healthcare and staples, which are really called your defensive part of your market, are really falling off a cliff in terms of relative performance. We really don't even see any value in there. So best place for value would be the financials.
Marianne, how about outside the U.S.? Do you guys allocate any money outside of the U.S. markets?
You know, in terms of asset allocation, when you look at asset allocation models over a very long-term period, diversifying internationally does work. But our thesis going into 2025, if we are correct that we're in this new technological advance, most of the technology is being developed here in the United States. And that means you have to own the companies here in the United States. So we see capital flows continuing to come to the United States. So although markets we think can go up outside of the United States, we think the leader of the pack will remain the United States. Now, it may be choppy back and forth, you know, up, down, but by the end of the year, we still think the U.S. will do well. And then you have to consider the U.S. dollar. And we see the U.S. dollar as either being stable to strong. So when you invest overseas, if the dollar strengthens, you lose part of your return. So for, you know, 2025, we have an overweight to the U.S.
All right, Marianne, thank you so much. We appreciate that. Marianne Bartels, she's a chief investment strategist for Sanctuary Wealth, joining us from New York via some Zoom here. Marianne was just calling out the dollar, and I just pulled up the Bloomberg Dollar Index. Yes, we have the Bloomberg Dollar Index, and really just since kind of late September, this thing's rallied, more than 5%, the U.S. dollar, stronger against the other major currencies around the world. So strong U.S. dollar, in part, had a nice rally. I guess the Trump trade, a lot of folks were saying, buy the U.S. dollar, short bonds, and that's actually what's happened in the marketplace. We'll have more coming up. This is Bloomberg.
markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
From the Bloomberg Interactive Broker Studio, I'm Lisa Mateo. We've got Wall Street on edge. Investors still torn over NVIDIA earnings. Those shares down more than 2%. We get to NASDAQ futures now down more than 1%, 234 points. The Dow up about 0.1%, 79 points. We have the S&P 500 down 0.4% or 24 points. We have the two-year yield at 4.31%. That's little change. The yield on the 10-year 4.39%, and that's down 2 basis points. We have the Bloomberg Dollar Spot Index down about 0.1%. The Japanese yen stronger at 154.11 against the dollar. The euro, British pound weaker, and we have Bitcoin at around 95,000. Some more economic data out today. Weekly jobless claims dropped to 213,000, the fewest since April. And then over in the property market, existing home sales rose in October. That was thanks to a dip in mortgage rates, but rates have jumped since then. And the Philadelphia Fed's Business Outlook Index, that dropped unexpectedly. Economists were looking for a gain there. Few companies making news. Yes, Adani Group. U.S. prosecutors charged Gautam Adani with taking part in that alleged bribe plot. Now, Adani's net worth fell by more than $15 billion just hours after he was charged. Adani denies those allegations. Shares in India, they're down about 22%. And the Justice Department, a group of states have proposed major changes to Alphabet's Google. That's including a forced sale of its Chrome web browser. Alphabet shares are down about 6%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now, wherever you get your podcasts. I'm Lisa Mateo. That's a Bloomberg Business Flash. Paul.
And Lisa, I go to Rich Go, R-I-C-H Go, and Gautam Adani, prior to today's trading, was ranked number 18th in the world, $85.5 billion net worth. But that's going to take a hit after we get the trading closing today. So interesting story. Lisa Mateo, thank you so much. We appreciate it. Alex Steele, Paul Sweeney live here in our Bloomberg Interactive Broker Studio, streaming live on YouTube as well. So check us out there. All right, here's the Trump trade as I understand it, over the last several months. Long the dollar, okay, I got that. That's kind of worked. Short bonds, I got that. Yields are higher. But then when you drill down a little bit, you start thinking about, is there going to be looser regulation? Might that support M&A? If so, what are some of the areas that could be ripe for M&A? Regional banks. I mean, we got like 4,500 regional banks around this country. Do we need all of them? I don't know. Herman Chan knows. Herman Chan, he's the senior analyst for U.S. regional banks for Bloomberg Intelligence. Herman, when you talk to the banks that you cover in the space, the regional banks around the country, do they believe there may be an opportunity over the next several years under a Trump administration where they might be able to get some deals done?
There's definitely more enthusiasm for that. The banks recently were at an investor conference, and the tone definitely shifted. Under the Biden administration, M&A, and bank M&A in particular, was pretty much discouraged due to tougher regulations, longer lead times to get deal approvals. They nixed the deal for that TD Bank wanted to buy First Horizon in Tennessee. So there were lots of evidence that M&A couldn't be done under a Biden administration. And now with Trump and a deregulation effort, there's more hope for more merger activity. And the valuations with the Trump bump actually just sustained that and helped that even further.
So, again, we've got a lot of regional and community banks in this country, which is unlike I've learned just over the last several years, reading your research, talking to you, and reading other reports. That's unusual. In other parts of the world, other countries, they don't have as many regional banks. They have a very small number of banks. Why do we have so many regional banks? And is that a source of strength, or is that maybe just inefficient?
Yeah, there's a lot to unpack there. Other countries have more of an oligopoly, whereas it's open competition here in the United States. A lot of it had to do with state regulation that was enacted, decades ago, and there were state banks, and they just proliferated. Eventually, there was some M&A activity, and you've seen that over the past few decades. But it is a strength because it creates more credit availability for various parts of the country and various entrepreneurs and consumers. So you can get more credit available to you, which helps the economy and stimulates activity. So all in all, I think it's a good thing, but it has proven to be a bit inefficient in this current dynamic where there's much more focus on technology investments, regulation, and so there definitely needs consolidation to occur.
Because when I heard Lloyd Blankfein, former CEO of Goldman Sachs, when he was CEO, he would say, this was 4 or 5 years ago, Goldman Sachs is a technology company. They spend more on technology than they spend on investment banking stuff.
Right.
So I think about some of these banks and how easy the apps are now for my Wachovia for my consumer stuff. So easy to use.
Right.
If I'm a community bank, I'm a smaller bank, do I have the resources to kind of keep up with that just client-facing technology?
Yeah.
Forget about the back office technology. Is that a strain for them?
It is, and it only is going to get worse as technology continues to evolve with AI capabilities, and so that's one of the reasons why we think merger activity will need to occur, because economies of scale is vitally important for the banking industry. And you just mentioned one thing with technology and apps, and a lot of these smaller community banks just don't have those products and services that consumers want these days.
So when I think of a quality regional bank, I think of your former employer, M&T Bank.
That's right.
Up in Buffalo, just a quality regional bank. Is it somebody like that is a natural acquirer, or is it just Community Bank A buying Community Bank B? How's this going to play out, do you think?
Yeah, it's going to be a little bit of both. The smaller banks will want to be a bit more independent to gain scale, and they see opportunities within their core markets. But we do think there will be regional bank champions that really extend their reach within their larger regional focus. M&T in the Northeast, PNC is another one that operates in the Northeast and Mid-Atlantic that's starting to grow in the Southeast. So, and then there's banks like Fifth Third that are growing in the Southeast. So there are opportunities for these larger regional banks to be more competitive with the trillionaire banks like the JP Morgan Chases and the Bank of Americas of the world over time.
So like a PNC, like an M&T, like a Truist in the South, which was itself the product of a big merger of
That's
two.
right, BB&T and SunTrust.
Exactly, and the worst name they could have thought of. But anyway, I know a lot of folks that work there, some good people doing good business in their markets where they feel like they can go up against a Bank of America, even a JP Morgan coming into you want to come into Winston-Salem and bank against me? Fine,
Right.
I'm ready. What do those guys do? Because they're kind of in between the money centers and kind of the smaller players.
Right. So what these larger regional banks talk about is targeted scale. So they are scale in their markets. They're not scale nationwide. So if you have top 5 market share in Winston-Salem or Syracuse, New York for M&T's sake, or Pittsburgh for PNC, you can compete because you have the marketing prowess within those markets and you have the branch presence in those markets. So it's not David and Goliath within those markets itself.
What are the valuations of these regional banks? Where are we today versus historical norms? Because I know that your group was under a lot of pressure for the last couple of years. We had some of those smaller banks blowing up. Where are we today?
Right. So on an adjusted basis, we're at 1.5 times tangible book value, which is
better.
That's better. That's basically where we were during the prior March 2023, before SVB and First Republic and Signature collapsed. We reached a trough of 0.9 times, so now we're back.
Yeah, so I mean, that was my call when we were talking to you a year ago. Like, if I were, the financials analyst at some hedge fund, I'd want to walk into my boss's office and say, I need more capital. I'm going long the regional banks.
Right, and it worked out because you were calling it around, the fall of last year, and we've seen that rebound. So
because reading your research, talking to you, anytime your stock get below 1 times book,
right, that's a good
unless
buying
something's
signal.
Really crazy in the world, that's when you buy them.
Exactly. So that's a good rule of thumb. Regional banks sort of echo what's happening within the economy, and so when there's fluctuations and uncertainty, there are potential buying opportunities, and that 1 times tangible book is a good litmus test there.
All right. See, I could have made money. Here I am. Thinking about it. Herman Chan, thank you so much for joining us. Herman Chan, he's our senior analyst. He covers the U.S. regional banks. We love talking to Herman Chan because the companies that he covers, they're making the loans to the small and mid-sized businesses all around the country, which are the backbone of this U.S. economy. And if you want to know how things are going, talk to a commercial banker in Pittsburgh, in Syracuse, in Winston-Salem. You get a good sense of how that market is performing. That's why we love talking to Herman Chan. Looking at the markets right here, the S&P 500 unched on the day, no question. Dow up 200 points, but the Nasdaq's minus 140 points. So the market has no idea what's going on today, but we'll stay with it. We're going to have more coming up. This is Bloomberg. Good morning.
This is Bloomberg Intelligence with Alex Steele and Paul Sweeney on Bloomberg Radio.
All right, Alex Steele and Paul Sweeney. We're live here in our Bloomberg Interactive Broker Studio. We're streaming live on YouTube as well, so check us out at Bloomberg. Go over to youtube.com and search Bloomberg Podcast. All right, Bitcoin, I'm calling it out for Tom Keene. I'm calling it out for Matt Miller. Up 1.8%, 96,200. I mean, we are right on that $100,000 level. Let's break down what's happening. Let's see what could be behind some of this stuff. Michael Regan, he's our crypto team leader. Yes, we have a team of reporters covering crypto at Bloomberg, which means you need a team leader to manage these folks, and that's Michael Regan. He drew the short straw. He joins us here in our Bloomberg Interactive Broker Studio. At the election, I'm just going to swag it here. It was about 60,000. Here we are pushing up against 100,000. What accounts for that delta?
Yeah, you know, the expression I keep hearing over and over again, Paul, is paradigm shift. You know, we went from sort of the near death of the entire industry with FTX and all the dominoes that fell after it a few years ago. Biden followed up, the Biden administration followed up with a really fierce crackdown on the industry. Now, what Trump has signaled is a complete 180. You know, instead of this, highly regulated, very intense scrutiny on the industry, he's talking about, replacing Gary Gensler with a crypto lover, and just, really being friendly to the broader industry of digital assets. But for Bitcoin specifically, it's this promise that Trump made in July at a Bitcoin conference to create what he called a strategic Bitcoin stockpile. So, think of the strategic petroleum reserve, or, we've had strategic wheat reserves in the past. The thinking of him and Cynthia Loomis, his ally in the Senate, the senator from Wyoming, is that if you not only Trump, first of all, the government owns about 200 and change Bitcoin from various criminal asset forfeitures, that sort of thing. I didn't know that. Okay. So that's sort of what Trump has hinted would be the basis for this reserve. Senator Loomis wants to go even further and have the government buy 1 million, nothing short of 1 million Bitcoins. So we're talking about 100 billion.
How many Bitcoins are out there? Do we have?
That's about 5% of the total.
So it's meaningful.
Of the total amount. Yeah. So. A big question mark, a big event risk looming over this market if that bill does not sort of gain more support. So far, she's the only sponsor of it. There's quite a bit of skepticism that she'll be able to get that passed. But the market is thinking there's a good chance of that. And not only that other governments will have to follow suit. If the U.S. suddenly is treating Bitcoin like a major reserve asset, other governments will likely be inspired to do the same. So that's kind of the backdrop for this just parabolic rally to the upside that we've seen.
Because right now it sounds a little bit like they would like to think about Bitcoin the way we currently think about gold, where we have gold sitting at Fort Knox.
That's exactly right. And what the Loomis bill would do would be sell off some of that. The Fed doesn't own physical gold; they own certificates. Yep. That represent gold held in Fort Knox by the Treasury. Her bill would require the Fed to start selling gold to buy Bitcoin.
Wow.
To sort of replace it as a reserve asset. Now, obviously, you think about telegraphing to the market 100 billion buy at today's prices. I mean, sky's the limit on the price. That's the thinking, at least.
Because what I know about Bitcoin, I learned from Mike McGlone. A fixed, if not declining supply, and presumably ever more use cases.
Yeah. Every 4 years, or so, the amount that's mined, that's the new supply, it gets cut in half. So that proposed government buy would actually overwhelm the amount that's mined.
All right. Another thing, the Trump's transition team is discussing the creation of a White House post dedicated to digital asset policy?
Yeah, that's a scoop we had yesterday. Yeah. It's still sort of a lot of questions about what exactly that would mean, but the idea is, give the crypto industry sort of a representative in the White House to manage what they want to do with regulations and that sort of thing. Again, just another sign of this sort of 180-degree paradigm shift in how the government will think about crypto and Bitcoin, especially under a Trump presidency, compared to the very tough crackdown that we saw under President Biden. So a real dramatic change.
Exactly. And so I'm asking myself, how do we get to 60,000 to 100,000? That sounds like the reason. That sounds like the reason. And it feels like Elon Musk is kind of has his fingerprints on some of this.
Yeah. I mean,
he's
a crypto aficionado for sure. You know, we named the Department of Government Efficiency is just named after a meme coin. But I would throw in Michael Saylor and MicroStrategy is another really important element here. You know, he's tapping capital markets for $42 billion, telling the world what he's going to do with it. Just buy more Bitcoin, and his stock is even outperforming Bitcoin itself by a tremendous amount. So it's really an interesting time to watch all this unfold.
All right, folks. I mean, we have 2,400 reporters around the world of Bloomberg News, and many of them, some of our best, have been and continue to be dedicated to this whole crypto market and reporting on the crypto market. And you know, at least I know how serious Bloomberg News is about crypto when they appoint Michael Regan to be a team leader, because he's been doing this stuff a long time. He knows good journalism, and you put Michael Regan on top of this team, that means we're serious about coverage of crypto. So we'll stay on top of this stuff. But again, you know, looking at the Bitcoin, up $2,300 here today, just under $97,000 per token. So a lot of folks out there are making some big bets on crypto. My youngest, who bought some NVIDIA just recently, talked to me about buying Bitcoin. I said, not with any of the money I've contributed to your account. If you want to go out and spend some of your money, go ahead. So that's how we think about it here. S&P 500 up 10 points. The Dow up 300. How about that? That gets your attention. NASDAQ off about 90 points here, a little bit on the NVIDIA trade here. I thought the NVIDIA numbers were darn good, and if not great, but you know, the whisper numbers out there get a little bit ahead of themselves. We're gonna have some more coming up in the next hour. This is Bloomberg. Good morning.
This is Bloomberg Intelligence with Alex Steele and Paul Sweeney.
The real outperformance has been the U.S. corporate high yield.
Are the companies lean enough? Have they trimmed all the fat?
The semiconductor business is a really cyclical business.
Breaking market headlines and corporate news from across the globe.
Do investors like the M&A that we've seen?
These are two big-time blue-chip companies.
The window between the peak and cut changing super fast.
Bloomberg Intelligence with Alex Steele and Paul Sweeney on Bloomberg Radio.
Happy Thursday, everybody. I'm Alex Steele alongside Paul Sweeney. This is Bloomberg Intelligence Radio. We cover all the top news in business, economics, and finance through our lens of our Bloomberg Intelligence folks. And we have a great lineup for you. We're going to talk to Christopher Ciolino. He's a Bloomberg Intelligence senior U.S. machinery analyst on Deere earnings. No surprise there. They see lower 2025 profit with farmers just not spending. Plus, Jen Rhee will be joining us. She's going to give us her breakdown on the DOJ seeking a Google Chrome sale. She, of course, is litigation analyst for Bloomberg Intelligence. David Kudla, founder, CEO of Chief Investment Strategist at Mainstay Capital, will join us with his take on the markets. And Duncan Fox over at Bloomberg Intelligence will talk about Unilever as well. But let's kick off this hour with a Bloomberg Business Flash. And for that, we go to Charlie Pellet.
Thank you very much indeed. Lots going on, and we got you covered here at Bloomberg Radio with the Dow, the S&P higher. Tech sell-off, NASDAQ 100 index both lower as investors digest the latest numbers out of NVIDIA. Also, add to that the war in Ukraine. That is keeping investors on edge, sparking a rally in crude oil. Right now, WTI, West Texas Intermediate, $69.99 a barrel, up 1.8%. This update brought to you by Anshin Accountants and Advisors, partner-owned since 1923. Anshin factors in your unique circumstances to develop innovative tax and accounting solutions. Visit ANCHIN.com. Anshin, recalculating what's possible. S&P right now up 11 to 59.28. That is a gain now of just about 0.2%. We have got the Dow Jones Industrial Average up 322, up 0.7%. NASDAQ, though, down 81, drop there of 0.4%. Russell 2000 index of small cap shares outperforming, surging by 1.3%. 10-year 4.40%, the 2-year 4.31%. Gold up $17 the ounce, 26.67, up by about 0.6%. West Texas Intermediate crude, as we mentioned, up 1.8%. And Bitcoin, 96,771. Just talking with our Mike Regan about Bitcoin, up today by 2.4%. So what about the market backdrop? Cameron Dawson is Chief Investment Officer at New Edge Wealth.
This is still a very powerful uptrend that we have been in. The question is, does that kind of low volatility uptrend continue into 2025?
Cam Dawson of New Edge interviewed this morning on surveillance. And by the way, you can hear more of that conversation on the Surveillance podcast. You can download it wherever you get your podcasts. NVIDIA, after earnings, down 1.3%. Among other chip names, AMD down 0.6%, Intel up 1.4%, and Qualcomm up by 0.9%. For on-demand news, 24 hours a day, subscribe to Bloomberg News Now, wherever you get your podcasts. I'm Charlie Pellet, and that is a Bloomberg Business Flash.
All right, thanks so much, Charlie Pellet. So it's weird that we're having a muted market reaction today.
Yep.
I gotta say that we are expecting something to be very dramatic, and it's just not. But there are still some individual companies that I think are worth talking about. PDD Holdings is one of them. That stock down over 10%. Luckily, Norma Linda is here from Bloomberg News Equity Reporter joining us. It definitely feels like a bottom-up day. What's going on with PDD?
Most definitely. So we are seeing shares down for their worst day since August, and this is after the company warned of worsening profit to come in the future. As we all know, this company is the owner of Temu. I've never shopped there, but apparently they've got low prices and you can get a lot of things in terms of the e-commerce side of things.
Super low.
Really? I might have to head over there.
I haven't bought because I question the quality, but this comes from nothing except from my
So maybe it's like a Shein situation,
What do they own?
an Alibaba situation where it's
what do
super
they own?
cheap.
They own
Temu.
it's like an e-commerce site, Temu.
Oh,
that-
apparently.
Okay.
It's like Amazon, but uber cheap.
Okay.
For the low.
Yeah.
Well, we're seeing shares dropping after the company warned of decreasing profitability. It's seeing increased competition in China. It's actually been trying to gain market share from rivals like Alibaba, JD.com. It's even apparently challenged Amazon, but apparently this outlook that we're seeing is not pleasing to investors. It reported quarterly sales and profit that missed expectations. It's saying that it has anemic Chinese consumer spending and a lack of expertise.
So a Chinese company listed
struggling.
listed in the U.S., domiciled in Dublin, Ireland. Go
Right.
figure. What a scam.
Huh.
What
do
a
we make of
wild
that?
one.
That's a
Dublin
tax thing.
Docks. Back in the 80s, I was part of an investment banking team that did a lot of these Dublin Docks deals, which was Dublin, Ireland. They created these tax incentives to attract businesses to Ireland, and they needed capital financing for the companies, and we stepped right in there and did a bunch of those
Wow.
deals.
You're like, yeah,
And
I'll
now
help you
I
out.
walked through Dublin a month or so ago, and I saw all this area of the Dublin Docks that's been totally built up over the last 30, 40 years. And
Did you feel pride?
I did. We did some of
I'm
those,
sure
some
you
of those
did.
financings back in the day. when
No,
was
I see
12.
that. Obviously, NVIDIA, have to pay attention to that as well.
Yes, quick touch on there. Of course, we all know this story. We're seeing shares down of more than 1%, 1.3% right now. And this is after its results did not beat expectations. Of course, we know there's a really high bar when it comes to NVIDIA. This is the name that we're watching. We always want it to be a blowout report. They were looking for a knockout a quarter to drive the stock higher, but that's not what we're seeing today. It had posted a revenue forecast for the current quarter. It exceeded analyst estimates by $400 million, but that's still not enough. We've seen shares fluctuating all morning thus far and keeping an eye there.
Also, Snowflake reported after the bell yesterday. On the flip side, Palo Alto was struggling, but Snowflake doing really well.
Snowflake is doing well, jumping as much as 32%. That's its best day since September of 2020. This is a software solutions firm, and Citi is calling it a redemption quarter, but they are seeing that they do need to see evidence that the company is maintaining a leadership position in this new intelligence cloud world before they can get fundamentally positive. So something to keep an eye on there, but they did raise their full year forecast for product revenue.
All right, Nora, thanks a lot. We really appreciate it. Norma Linda, Bloomberg Equities reporter, joining us there. One other stock to watch is Deere. So that stock is up a whopping 7%, jumping to a one-year high. Now, the company projected 2025 profits that were not as bad as feared, but still, what we're taking away here is that farmers really aren't spending. Joining us now is Chris Ciolino. He is a Bloomberg intelligence analyst that covers all the farming guys for us. Hey, Chris, why is the stock up 7%? Like, do we really think it was going to be that bad?
Yeah, I mean, I think you hit the nail on the head. The guidance was pretty ugly, right? I mean, we're talking pretty significant declines for a second year in a row, but buy-side expectations were extremely low going into the print, particularly after some of their competitors reported big misses and cuts to their outlook this quarter. So to your point, probably not as bad as feared. I do also think that there's growing optimism that 2025 will kind of mark the bottom of the cycle. We heard that from Deere on the call today. The worst of this large ag inventory destock appears to be behind us. So the magnitude of some of those production cuts should begin to ease as we move through the year. those are the positives. I don't think we're completely out of the woods yet. I think there's still a lot to do, and it's still maybe a little premature to call a bottom. Farm fundamentals are going to remain weak, and not to mention we're on the precipice of another trade war with our largest customer. So I think there's risk of kind of a prolonged downturn, even if things don't deteriorate from here.
So, Chris, that's kind of where I wanted to go. I mean, thanks to your research and talking to you, we've come to understand that deer is a pretty good barometer how the U.S. farmer is doing. How is the U.S. farmer doing these days?
It's difficult. It's extremely difficult right now, particularly because we have very low crop prices. So that's pressuring farm incomes. Interest rates still remain quite elevated. And now you throw on top of you have also used equipment values that continue to deteriorate and inventories continue to rise. And then you throw on top of that the trade uncertainty with some of our biggest customers. It's not a conducive setup to going out and spending on machinery next year.
What do we think the trade impact would be? Like, how are you modeling it right now?
Good question. And I don't think anybody has a good answer, Deere included. Certainly seems like we're headed towards more of a contentious trade relationship with China and the further decoupling there. They are our largest export market for U.S. farmers. We sent nearly $30 billion of exports, or 17% of all of our ag products, to them last year. So if, in fact, we do move forward with this 60% tariff on Chinese goods, they're going to retaliate. Soybeans and ag products are an easy target. We saw it during Trump's first term, and I see really little reason to believe that it's going to be any different this time. And if you look at what happened during the last administration, we saw ag exports come down by more than 50%. Wow. Soybeans were down more than 70%. Yeah. So we're talking very significant reductions from our most important customer. And people aren't going to go out and spend until there's better visibility on trade relations.
So, I mean, that is tough. When that happens, when the Chinese market gets curtailed via tariffs, what do the exporting farmers do? Are there other parts of the world that'll take our soybeans, take our corn, take our wheat?
So China has been, steadily diverting or pulling more of their imports from Brazil. So I'd expect that, we're going to continue to lose share to South American growers, particularly Brazil, Argentina, as they ramp up production. As a consequence of that, trade flows are going to have to reroute. We only have, finite amount of grains and soybeans. So there is going to have to be some movement. It's not like those exports are going to go to zero. But, I think one of the bigger concerns here that is really maybe not even fully appreciated is that, I think U.S. farmers are going to structurally lose market share to South America. And that's going to be tough to, reroute trade flows and to, regain share to the magnitude of what we had seen historically.
All right, Chris, we really appreciate it. Thank you so very much. Chris Cialino, Bloomberg Intelligence Senior U.S. Machinery Analyst. Some breaking news for you concerning Volkswagen. Volkswagen labor side is warning that a strike at VW could start in December. The labor side said the next rounds of talks are on December 19th. And this is as we're looking at potentially walkouts. You have executives on one side and unionists on the other side. How to restructure Volkswagen. The labor leaders are offering about $1.6 billion in additional cost cuts to keep factories open after management sort of threatened the idea of some closures, but those sides remain very far apart.
And they don't strike very often, as I understand it, in Germany, never.
No, it's not, yeah, because usually the unions just win stuff, right?
Exactly.
Anyway, we will keep our eye on that and any sort of headlines that cross. The other headline that we're paying attention to is Google, the DOJ, hunkering down here and saying, you know what, Google, it's time to get rid of Chrome. Is that actually going to be realistic? Jennifer Rhee is Senior Litigation Analyst for Bloomberg Intelligence, and she joins us from Houston. She's in my neck of the woods. What are you doing in Houston, Jen?
I'm in Houston for yet another challenge to a merger. This is a trial of the Federal Trade Commission versus Tempur Sealy and Mattress Firm trying to block that deal. So that trial's been going all week, and I've been attending it up until today.
Jen, when she goes to an analyst meeting, she goes to sit in a courthouse and listen to a trial. When I was an analyst covering the media industry, I would go to an analyst event. We'd go to Disneyland.
Right.
Or we'd go to a movie studio at Warner Brothers. That's fun.
Yeah, but I
See, I had a way better job.
No, it's true, but I actually think that Jen likes sitting in the courtroom and hearing this stuff. So let's put it that way. So, okay, the DOJ is proposing some major changes here to Google, including a forced sale of Chrome. Is that realistic? Does it happen?
You know, I think it's highly unlikely. I don't think it's any surprise that the Department of Justice asked for this. I mean, they said this way back when years ago when they filed the suit, and they also said a few months ago that they were likely to ask the judge to order Google to divest Chrome. I don't think, I mean, to make it really simple here, based on what the judge decided in his liability decision against Google, I don't think that punishment fits the crime. And if Microsoft case, which is the last big monopolization suit in the tech industry in the 1990s, tells us anything, is that the appellate court said the remedy has to fit the wrong. And the wrong here really was focused on all the default agreements that Google had with many providers at every search access point. So it seems to me the starting point here is just to get rid of all those default positions, open up those default search engine spots behind other browsers and other search access points.
So, Jen, let's step back a little bit. How is your world going to change under a second Trump administration? I mean,
is this conversation relevant?
Are we ever going to talk to Jen Rhee again? Because I think the FTC and the DOJ, maybe they'll just kind of look the other way for some of these deals. How do you think things are really going to change from an M&A perspective? Because you got bankers all across Wall Street saying, boy, the next 4 years are going to be good.
You know, they're saying that, and I do think we're going to see a frenzy of deal making. I think you're still going to be talking to me, though. I don't really think things are going to be as easy with the next DOJ or the FTC in the next 4 years as people think they will. I mean, we have to remember that it was during Trump 1.0, his first administration, that aggressive antitrust started to ramp up a little bit. You know, nothing like the last 3.5 years, absolutely nothing like it. But it did start to ramp up. In fact, this Google suit was brought by the Trump administration's Department of Justice. And I note that in the second year of his term, there were 7 deals that were challenged in court, which is a lot more than there had been in a year for many years before that. I will say this. I think a lot more deals will probably be able to close with a settlement, you know, a remedy where they agree to a behavioral condition or they sell an asset rather than getting challenged in court. I think that'll be the big difference. This FTC and Department of Justice don't like to settle.
Okay, but would it also be sector specific? Like some sectors where President Trump's really going to go after and other ones where it'll just look away?
I think so. I definitely think so. Trump hasn't been a big friend of many of the big tech platforms. He has said things both about Meta and Google. He's unhappy with the way they conduct their business. So I do think that the next administration will stay pretty tough on big tech. Having said that, though, what could be really interesting here is we could see history remake itself with what happened with Microsoft, where a court did order a breakup of the company. We had a new administration come in. We switched from Democrats to Republicans, and then the Department of Justice under George W. Bush settled the case. Interesting thing here is that, no, I don't think that the judge is going to order a breakup. I think it's very unlikely, but let's just say he did. We already heard President-elect Trump say in an interview with Bloomberg's John Micklethwait that he didn't think Google should be broken up. He does think Google should be punished, but not broken up. So there's a possibility here that if the judge actually did order something drastic, like a sale of Chrome, that the next administration would come back and during the appeals process settle the case. It would be kind of fascinating if that happened.
So what do you think will happen with Google here?
I think this is going to get dragged out for a long time. I think the remedies will be decided in August. That's what the judge told us. I don't think it'll be a divestiture, but it could be a pretty extensive remedy that really hobbles Google in competing, let's say, in AI search, related search going forward. Google will appeal for sure. For the pendency of the appeal, they'll ask the court to stay the remedies, and they have a shot at getting that, which means these remedies could be just frozen for the next couple years after August when they're actually decided for the pendency of the appeal. So, you know, it's going to be a long time, I think, before anything really happens here.
All right, Jen, we really appreciate it. Jen Rhee joining us, Bloomberg Intelligence Senior Litigation Analyst, joining us from Houston, Texas. You have to wonder, though, too, going forward, these big tech companies, is M&A totally off the table? Like even tuck-in deals at this point?
It feels like it. I mean, I think that's been the expectation in the marketplace over the last, really not just the last 4 years, the last 6, 7, 8 years, that's in fact been the case. They just become so large, and they become even larger just organically. So that's kind of been it. And so some of these stocks, investors, they've kind of discounted that already, I think.
Right. Yeah, that's what it looks like. Or also just the whole idea of like, we're going to buy this company. We love the talent. That seems also maybe off that table as well. All right, coming up, David Kudla, founder, CEO, and chief investment strategist at Mainstay Capital Management, will be joining us for his outlook on the markets. And Stephen Dennis, Bloomberg congressional reporter, on the latest political news of the day. The headlines come so fast, I can't keep track. The Treasury Secretary is still front and center. This is Bloomberg.
Markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 11:21 on Wall Street. We do check markets all day long here at Bloomberg. We have got the Dow powering higher, S&P advancing, big tech tumbling on this Thursday. Traders are digesting NVIDIA's numbers last night, while the war in Ukraine is keeping investors on edge, also sparking a rally in crude. Right now, the S&P is up 13. That is a gain of 0.2%. The Dow up 372, up 0.9%. NASDAQ down 76, a decline of 0.4%. Got to mention the Russell 2000 index, it is up now by 1.4%. The 10-year, 4.41%. The 2-year, 4.31%. Spot gold up $14 the ounce, now at $26.65, up by about 0.6%. West Texas Intermediate crude back above 70, 70.02 a barrel, up by 1.8%. And Bitcoin now above 97,000 on Bitcoin, up now by 2.7%. Snowflake shares up 33.3% after the company gave a better-than-expected sales outlook, suggesting newly launched products are receiving a strong reception from customers. Also, NVIDIA assuring investors its new product lineup can maintain the company's AI-fueled growth run. NVIDIA shares after earnings down today by 1.6%. For on-demand news, 24 hours a day, subscribe to Bloomberg News Now, wherever you get your podcasts. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
All right, thanks so much, Charlie Pellet. Alex Steele here alongside Paul Sweeney. This is Bloomberg Intelligence Radio. We are broadcasting to you live from our Renactor Broker Studio. Interactive. I don't know what word I said, but Interactive Broker Studio.
That works.
Right here in Midtown Manhattan. So NVIDIA was being billed as like the market mover for the rest of the year, that it was more important than the Fed, it was more important than any jobs data or inflation, but now it's over, so now what? David Kudla, founder, CEO, and chief investment strategist at Mainstay Capital Management, joins us now. So David, what now? Like now what are you focused on?
What now? After NVIDIA, that many have said might be more important to the markets than the Fed. But we do have PCE coming up at the end of the month, PCE for October, and then we'll get CPI and another round of data here in early December. And I think, for the Fed, as far as the Fed is concerned, they're kind of between a rock and a hard place. They have, since September, when we were looking at more than 200 basis points in cuts by this time next year, we've had unemployment has improved, has gotten lower, growth is stronger, inflation has crept up a little bit. On the flip side of that, if we look at personal bankruptcies, we look at auto delinquencies on auto loans, credit card debt, those are all at multi-year or decade highs. So there's cracks in the economy, there's things to be concerned about, but in terms of some of the other factors that the Fed looks at, I think there's a lean towards not cutting in December, and the markets won't like that. So I think we're in for some volatility. We've had a great 2022 and 23, and I think we're in for some volatility in 23 and 24, and in for some volatility in 25.
David, it was 2 weeks ago yesterday that we all woke up to a new president. We now know that we have a Republican-controlled Senate and House. Did that change your outlook or the way you approach markets, or maybe how you allocate assets here?
Yeah, we always say, and we educate our clients, and the thing that we try to make sure is that clients, and investors in general, there's a tendency to go to cash in an election year because they want to wait and see what happens in an election. And inevitably, election years turn out to be very good on average. This one, the best election year since 1936. But what we do want to do is look through to what we have for Congress and the executive branch and what that means as tactical asset allocators. And the big wild card for next year is tariffs and what that could mean in terms of a trade war. We know what that brought in 2016 in President Trump's first term. So there is some concern that with tariffs, that's also going to be problematic for inflation. How much of it was campaign rhetoric versus how much of it will go into effect? They seem pretty serious about it. Howard Lutnick, who was named Commerce Secretary, he's almost a self-proclaimed tariff czar. So I think there's going to be a run at it. What that results in terms of trade wars, the industries that affects versus others, that'll be very important for market participants.
When you mentioned there was going to be more volatility, what assets do you think will have the most volatility? Whether you're looking at, say, politics, as you mentioned, you also talked about potentially skipping a cut in December. Where do we see the most action?
Well, we're seeing a lot of volatility in bonds. We already have this year. Interestingly enough, as the Fed cut the first time. They've now cut 75 basis points during that time frame. Both the 10-year and 30-year have gone up about 75 basis points, which is that counterintuitive reaction function. So we've seen really a lot of volatility in the bond market. But we'll see, we think we'll see increased volatility in the stock market because even though the election is behind us, now that uncertainty is behind us, we have the uncertainty over tariffs and just how aggressive some of these moves will be. Even when we talk about eliminating or significantly reducing government agencies, what that would mean to unemployment. So there's just a lot of new factors to look at in terms of overall investment strategy that will be driving volatility into both bonds and stocks. We don't think about volatility a lot for bonds, but we've seen a great deal. If we look at the MOVE index, which is like the VIX for stocks, bonds have been quite volatile. They'll continue to be. And we think we'll see more volatility in the stock market.
So we started off, David, by just chatting about NVIDIA. I thought the numbers were pretty solid, but of course the expectations were just massive here. What did you learn, if anything, last night from NVIDIA's results that maybe change or affirm your thoughts on technology?
Well, first of all, NVIDIA is, if you talk about a company that has a very wide moat around it because of generative AI and their place in that, it's NVIDIA. They beat top line and bottom line. Should have been a good report, but the problem is investors have become accustomed to these blowout numbers, just blowout numbers for NVIDIA that they've had in past quarters. So it's a little bit of a letdown on the size of the beat. The stock sold off after I was trading, pre-market was down, and it's come back a little bit. But the bottom line is NVIDIA still has a long runway ahead of it, and their new generative AI chip is doing well, and I think that it still makes sense as part of a portfolio.
What about Bitcoin? Are you on the Bitcoin bull train here?
Yeah, the interesting thing about Bitcoin is those that have been bearish on Bitcoin, fake internet money, it'll eventually go to zero, Ponzi scheme, whatever, they've been humbled, right? They've been humbled. Bitcoin is, as we've said, it's here to stay. It may be an asset class all in of itself, but just looking at what's happened here since the election, the talk of a strategic Bitcoin reserve. You had a segment earlier on the show about it. President Trump wants to call himself the Bitcoin president. So we're seeing the asset or the asset class of just Bitcoin by itself, not the other coins, is rising on that speculation. And we look at it like gold, really. If it's digital gold, gold doesn't have a price to earnings ratio. It doesn't have a dividend yield. Bitcoin doesn't either. There is more gold that can be mined. Bitcoin, there's a fixed amount.
Right. David, thank you so much for joining us. I always appreciate getting a few minutes of your time. David Kudla, he's the founder, chief executive officer, and chief investment officer. I guess that makes him the boss at Mainstay Capital Management. Appreciate that. Let's get back to Washington, D.C. on the political front here. President-elect Trump and his team, the picks for cabinet are coming fast and furious. One notable exception is we still don't have a Treasury Secretary nominee. Let's see what's happening down there in D.C. Stephen Dennis, Bloomberg congressional reporter, joins us here. Stephen, what's the feeling in D.C. these days about maybe the tardiness, if you will, or the late date of hearing about a Treasury Secretary?
Yeah, I think what we're seeing is basically a tug of war between two camps. There's a camp of populist Republicans who want to see somebody who will carry out Trump's tariff agenda. And then you have another group that wants somebody much more comfortable with Wall Street, that will help stocks go up, that will not make markets unhappy. And that marriage of those two things is very hard to figure out. And so far, the president has met with a lot of potential candidates, including 3 yesterday, Scott Bessent, Mark Rowan, and Kevin Warsh, but none of them have yet sort of knocked the president's socks off. He also traveled with Bill Hagerty of Tennessee, another person who's seen as a possible Treasury Secretary. And so it's possible that he might settle on one of these names. It's also possible he could continue to look. And there are also several other economic positions that remain open that some of these people could end up in those slots as well. But I think it's an uneasy marriage between the sort of classic business Republicans who mostly are free trade supporters and president's agenda, which is massive new tariffs that are global and big.
Yeah, I mean, it's amazing. That's a pretty super solid lineup of people, like impressive resumes, whether you believe in their policies or not. It's like he's not impressed. That's something. What about a potential cabinet position or for a crypto boss? Is that something that could be actually realistic from what you're hearing, or is it just good gossip for the media?
Yeah, I think that it's possible that the president could end up with people who are sort of informal advisors or are supported by the crypto community, certainly for some of the key positions. But that doesn't necessarily mean you're going to see, somebody who's made billions in crypto, showing up and having an easy confirmation process. And so, that's the other thing is Trump does not, at this point, seem to be all that interested in what the Senate thinks. That's what I've been, he has been calling senators, but he's been making a bunch of picks so far that are making Senate Republicans squeamish. They want FBI background checks, they want all the rest on Matt Gaetz and all the others. And so there is a lot of pushback on the president wanting to do recess appointments and just sort of pick the team that he wants of disruptors. The Senate is not really full of disruptors. It's full of establishment folks who don't really like tariffs and don't really like upsetting the apple cart that much.
But at the end of the day, isn't the expectation, Stephen, that the Republicans, senators in the Congress will acquiesce to President-elect Trump and put his candidates through?
Yeah, I think by and large, especially on these core economic positions, it's going to be a lot easier for the president than it will be on some of the national security questions. We have this situation with Pete Hegseth with a police report that was published overnight from a 2017 incident with a woman. He's one of several now who have allegations of sexual assault in their past and have to figure that out. And those are the ones that are going to be the hardest for the president to get through.
All right, Stephen, thank you so much for joining us. Stephen Dennis, he's a congressional reporter from Bloomberg News. He's based down there in Washington, D.C., and we're still waiting for a nominee for the Treasury Secretary, and that's certainly what Global Wall Street is focused on at the moment. We're going to have more coming up. This is Bloomberg.
markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 11:40 on Wall Street. We do check markets all day long here at Bloomberg. Tech tumbles, small cap shares push higher. We've got the Dow up 360 right now, up by about 0.8%. S&P higher by 15, up 0.3%. The Nasdaq Composite Index down 68, down 0.4%. The Nasdaq 100 Index lower by 0.1%. The Russell 2000, meanwhile, up by 1.5%. The 10-year at 4.41%, with a 2-year currently yielding 4.32%. Spot gold up almost $16 the ounce. The precious metal higher by 0.6%. 26.66 where we stand right now on gold. West Texas Intermediate up 1.6%. 69.86 was back above $70 a barrel a few minutes ago. Bitcoin, though, at 97,093. Bitcoin right now up by 2.8%. Weekly jobless claims keep falling in the waning days of the Biden administration. And with that story, here's Bloomberg's Vinny Del Giudice.
They did it again. Jobless claims dropped to 213,000, the fewest since April, and near historic lows. Economists see jobless claims stabilizing, at least in the near term, following the Boeing aircraft strike and a pair of hurricanes. While there have been a few high-profile job cut announcements of late, there's little evidence of widespread cuts. Vinny Del Giudice, Bloomberg Radio.
MicroStrategy, the largest publicly traded corporate holder of the cryptocurrency, is retreating after 3 days of double-digit gains as Bitcoin advances. Right now, as I mentioned, Bitcoin up 2.8%, but shares of MicroStrategy, they have been lower by almost 10%. Right now, they're bouncing around back in the green for MicroStrategy, up now by 1.9%. NVIDIA after earnings down 0.7%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
All right, Charlie Pellet, thank you so much. We appreciate that. Alex Steele and Paul Sweeney, we're live here in our Bloomberg Interactive Broker Studio in New York City. We're streaming live on YouTube, so head over to youtube.com and search Bloomberg Podcast. That's where you'll find us. Well, yesterday, Bloomberg Intelligence hosted Gen AI. Can it deliver on the productivity promise? A really good conference of smart people where leading executives across technology and other sectors come to discuss the productivity benefits of Gen AI. I hosted a conversation with Runway Head of Operations and Partnerships, Michelle Kwan, on the future of AI and prompt-based video generation. I started by asking Michelle to tell us a little bit more about her company, Runway.
So Runway is a New York-based company. We're an applied AI research company doing fundamental research in the field of generative media models. So think of the audiovisual domain, video generation, image generation, audio generation. And I think what's equally important to what we do is building products and softwares on top of those models to deliver value to users all over the world. We have tens of millions of users, individuals along with the Global 2000.
Here's our polling question, folks. Has AI created more deepfake content compared to traditional tools? Nice little yes or no question. So go do the old thing and give us some answers. We'll put the data up there as we get it. So, Michelle, talk to us about kind of what you think, or what are some of the use cases that you're seeing from your clients? How are they using prompt-based video generation? Did I get that right?
Yeah.
First, tell us what prompt-based video generation is and how are they using it?
Yeah, I would say everyone, it seems most people, especially in this room, are going to be familiar with prompt-based, whatever it may be, whether it's video generation or text generation. I think prompt-based is a pretty imperfect way of defining an end state. Language is so subjective. Not everyone speaks English. And what we see actually is a lot of our users using a combination of modalities and inputs. So either text and or image. We introduced a new model in the last couple of weeks called Act 1, which uses video as an initial driving input to get net new video out, which I think is really, really cool. I would recommend everyone taking a look. But prompt-based essentially means you're taking one input to get net new output. And we've seen really that transform different ways for people to tell stories or to create professional level final frame content at a fraction of the price and usually significantly cheaper. There's a large travel agency that we work with. they were using traditional workflows to create social media content, which we all obviously see and engage with. It was taking them about a week and a half to create one piece of social media content. And if anyone's on TikTok or if anyone's on Instagram, you might scroll right past that. Now with Runway, they're creating that same piece of content in a couple of hours. Used to touch 3 to 4 teams, now 1 or 2 people are creating that. So that's such a contraction of timeline, but you're still getting high quality, again, final outputs that you can use across multiple platforms. So that's one example. What I think is actually even more interesting is the types of users that we see creating content and never sharing it. It's kind of the same way we all take photos on our iPhone or whatever mobile phone you may have. Most of it is never shared with other people. You might post your best, most flattering ones on your social media platform, but a lot of it is just for memories or it's for our own sake. And we're seeing that also in individual user behavior, which I think is really interesting.
So what does the creative community writ large, what's kind of been the response, whether it's the Hollywood community, the, I don't know, the ad agencies, anybody who touches content here in a commercial sense, how are they responding to this, another form of user-generated content?
I think the haters want to hate, but...
And who would be a typical hater, for example?
I think, for the most part, we are seeing a real embrace of Runway.
Okay.
At the studio level, at the production house level, at the professional agency level, most of which are our customers today. I think a lot of it comes from a fear of unknown, people who haven't ever used it before. And over the last 6, 9, 12 months, there have been a lot more people who are now familiar with Runway, who have gotten a chance to experiment, who have gotten a taste and understanding that this is a new type of workflow, a new tool to help them do their job as they've been doing. And they're going to be more successful at it than most people who aren't doing a 9-to-5 creative job. But overall, it's been really positive.
So to the question, the data starting to come in, has AI created more deepfake content compared to traditional tools? The overwhelming response is yes. How do you guys think about that? And is there anybody regulating this stuff? Should there be anybody regulating this content?
I'm very surprised to see that answer. I think I don't know the full history of deepfake content, and it's obviously not one that I think is very nice. But it's obviously been recent, and I think that with any software, regardless of whether it's generative in nature or not, people who have malintent will find ways to do bad things with those tools. And it is a responsibility not only of the developer, so in this case Runway, to do things to discourage or to create safeguards so that people can't take advantage of creating deepfake content. So we have our own, I was mentioning to you earlier, we have 40 plus of our own models that we've created, many of which are generative in nature, some of which are not. One example is our content moderation systems and models that we've created in-house, and we apply on both the input and the output side to try and discourage or disallow this type of activity from happening. But there have been ways to create deepfake content way before generative tools were available. And so whether it's with Runway or others, people will.
It just begs the question, which I think we're all going to have, and it's going to be an evolving discussion about the regulation of just content in general, and it's just this is just another aspect of it, certainly from a user-generated side. On your enterprise business, who's a typical customer of yours? Like, who do you guys talk to?
Yeah, we work with the Fortune 20 companies, and we also work with smaller agencies in maybe non-tier 1 or tier 2 cities who don't have access to schools or training to be able to use really sophisticated, what is soon to be very outdated software, and everyone in between. We have a lot of schools who are also enterprise customers of ours. But I think what we're really excited about is expanding the definition of who can create content. Yes, you get some perks and you get some new products through our enterprise offering that you might not with our self-serve, but we continue to see an evolving world of enterprise and of paying users.
All right, that was Michelle Kwan. She's the current head of operations and finance at Runway. This is a company that creates video just from AI. You type in, hey, make me a scene of somebody playing golf in Ireland. Boom. They go out and find the video and the voiceover, the editing. It's just amazing AI. It's everywhere. And they had some smart people at the Bloomberg Intelligence Conference yesterday.
Amazing.
Right, hosted. We're going to have more coming up. This is